A very warm good morning to all participants for the second day of this GST Advanced Certification course. Today, we are going to cover the topic of resolved and unresolved issues in relation to classification, reverse charge mechanism, time of supply, etc. So in the first part of the session, we are going to cover the resolved and unresolved issues in reverse charge mechanism and time of supply. The topic will be deliberated by the eminent speaker CA.VENKATAPRASAD, and the expert comments and value addition will be provided by CA Anil Kumar Beswada, who were taking the session on levy yesterday. I will repeat the introduction of CA Venkataprasad. He is a qualified chartered accountant and a law graduate, presently heading the litigation division in Hyderabad branch of Hiragange Associates. He appears before SESTAT and various other tax authorities. He is a faculty at ICAI, NASIM, and has given lectures at various other professional forums of service tax and GST. He is an active contributor of articles in GST Law Times, other professional forums. With this brief introduction, I would warmly welcome speaker for today's session, CA Venkataprasad sir. Welcome, sir. And an announcement to all participants: kindly raise the queries in the questions box, and in case of any technical difficulties, issues like voice not audible or the PPT is not visible, kindly raise those issues in chat box. The questions box has to be exclusively used for the doubts and queries relating to the session. Thank you. Sir, you can take over the session.
Yeah, thank you, Arjun, once again for your introduction.
Sir,
I think the PPT I'm not able to see.
PPT is not visible? Yeah, is it visible now, sir?
No, as of now.
Okay, sir. I will do that. Sir, one of the requests from the participants is to switch on your video. Is it possible? You have proper net connection to provide a video?
Net connection is there. There is some light problem in my house, so that's the reason I cannot able to switch on the video.
Yeah.
So sorry for that. I'll try if something comes further. Yeah, I think still that PPT is not visible.
Just a minute, sir. I'm showing it. The audience kindly bear for 2 minutes due to this technical issue. I will rectify it. Is it visible, sir, now?
Yeah, it is visible now.
Yes, sir. You can continue.
Yeah. Welcome back, each participant for the today's session. The first session of the today is on the issues in reverse charge mechanism and time of supply, and we'll start up as explained earlier in the yesterday session. We are not covering the basic provisions of the law. We are only directly going into the issues, and we are trying to analyze the various possible interpretations, and with the help of the settled jurisprudence under the pre-GST law and GST law, if any relevant judgments has come as of now. So as far as today topic is reverse charge and time of supply. And Arjun, next slide. Arjun, next slide. Yeah. Today, this is a broad coverage for the today. So we are going to cover these are the various issues in reverse charge as well as the various interpretation issues in the time of supply. So next slide, Arjun. To start with, first, reverse charge. Before getting into the issues, I would like to reiterate the principle that reverse charge mechanism is only a shifting of the liability on the recipient of service or goods instead of directly instead of paying by the supplier. This is nothing but a reverse application of the indirect principles. instead of where supplier or the service provider would be collecting the service GST and paying it to the government. So here, except the specific provisions given for the reverse charge complaints, all other provisions as applicable for the normal charge will applicable. Generally, why government goes for a reverse charge mechanism is because of various reasons. Main reason is that if unorganized sector or where the sector where the number of suppliers are in huge and they are maybe small, but at the same time in terms of the recipients would be less. Like say if you take an example of insurance agent or agent for the bank. So where if you see even small persons may be doing services to the bank, and they may be getting commission from the bank. If you ask each commission agent of the bank or insurance, they have to register once they cross 20 lakhs, and they start complying with the GST. So there is a huge complaints burden on the all these small taxpayers, as well as it is for the headache of the government also, to that they have to administrate the lot of taxpayers. Instead of that, if they shift it to reverse charge, they can only administrate that to 10-15 banks what we have now, or insurance company which are also in not more than double digit. So thereby, for administrative reasons or various other reasons, reverse charge government generally prefer for a reverse charge. And sometimes the taxpayers themselves ask for a reverse charge, mostly considering the business reasons. One is major reason would be that one is that if I start particularly in the wake of GST matching ITC concept, where I have to wait till my supplier files the returns, I can't take ITC. So if it is under reverse charge, I can directly pay to the government, I can take ITC. Thereby I can avoid that uncertainty or risk of me losing the credit if it is under reverse charge. So for the large corporates, it is easier for their compliance. Instead of giving it to a supplier and believing waiting for him supplier to file return, if it is under reverse charge, they can only directly pay and take credit. And also if you look at from recipient suppliers point of view also, take an example of security agencies. Security agencies generally operated by the or the run by the most of the times it is individuals or the persons who are retired from the military services or army services. So they may not be having huge administrative setup and all that, and most of the times MNCs will have a credit period of 1.5 month or 1 month. So what happens is that in security agencies or manpower contracts, they will have a clause that you remit the salaries or payments to your workers or the manpower whom you are recruited in our company. On payment of the salaries to that workers only, we are going to pay you the charges for this security. They're going to reimburse it. That means security personnel has to first pay to the salaries to the security staff who are deployed at client place. After that only, most of the times these MNCs are going to reimburse. That means uh, to get the money from the corporate is not very immediately, may not be getting. So he has to wait for at least 1 month or 1.5 months after he is making payment to the his staff. So here the burden would be that, see what happens today, I raise invoice. Two things, two financially there is a problem for the security personnel, security company. One is that they have to shell out money for the salaries of their staff. Second is that they also have, the moment you raise a tax invoice, you have to pay GST at 18%. So one in both the amounts, either the principal amount of salaries for their service charges and GST at 80%, both the amounts I have to pay my first I have to pay my from my own pocket, and later I'm going to get reimbursed from my recipient. Many times that will be delayed by more than 1 month or 1.5 months, because and the moment it is delayed by 1 month, again that payment labor payments circle will come again, and again I have to shell out the money for a salary payment. So it is like this. So these players or the small players are facing a lot of challenges, particularly in terms of the relation of the GST from the recipient. So it is like just going in a circular reference where I am not paying GST because I have to get money from the recipient. Recipient says, no, first you pay GST and then only I'll give. So likewise, there are various challenges wherever government felt that there is a non-compliance only because of this, or they can be avoided bringing reverse charge. They'll take the approach of bringing those services under reverse charge. So with this, I'll go to the first issue of the reverse charge. If you see the reverse charge notification, reverse charge provisions, to give a recall of the provisions, section 9 of CGST Act, which provides for a levy of the GST, section 9(3), which provides that they are going to give a specified services or notified goods or services on which reverse charge has to be, on which reverse charge will apply. That means the recipient has to pay under reverse charge. Similar section is also there in IGST, where the recipient has to pay GST and reverse charge for the notified goods and services. As far as another section which also talks about reverse charge is the section 9 subsection 4. A parameter section is also there in section 5 subsection 4, which says unregistered procurements. That means procurements from the unregistered RCM. Also there is a reverse charge. However, there is a as you might be aware, there is a initial there was a pain, there was a problem in implementing that, and later it was suspended, and as of now it is under suspension except for 1 or 2 services. So this is the brief, and in exercise of these powers under section 9(3) or 5(3), there were notification was issued by the government. As far as CGST Act is concerned, that notification number is notification number 13 of 2017, which list out the more than 15 services as under reverse charge, and where the most of the cases recipient has to pay GST under reverse charge from the notified services. So first and foremost, the services is that services of goods transport agencies. Next slide. Yeah, first serial number serial number 1 of the notification is services of goods transport agencies, where it says services of goods transport agencies to a prescribed recipients. If you see that prescribed process, more or less most of the people are covered except individuals or non-business entities. So however, the issue is not there, but the point is, they says who has to pay GST under reverse charge is that the person who pays or liable to pay freight for the transportation of goods shall be the person who receives the services. Thereby, he has to pay GST under reverse charge. Now the point is, okay, if I'm appointing a GTA and paying transportation charges to him, then it's fine. I'm receiving services from GTA. Thereby, I'll pay under reverse charge. That's fine. So that I'll understand, because even that explanation given under notification also attracts me, and I have to pay GST under reverse charge. But the practice of the department is different. Is that, see, because to explain this practice, I must go to the service tax background, where this similar reverse charge was there from 2020, 2001 or 2002, where government started levying service tax under reverse charge on this GTA. So the moment their approach of the department is very simple from their side, is that the moment they see any amount in the books of accounts as a transportation, conveyance, freight, they'll not look at anything else. They'll only simply ask for is, you have incurred a 10 lakhs of freight charges. How much, and this is the abatement. With service tax, there is abatement. They says, this is abatement, this is the amount. So you pay service and reverse charge. Same practice they are going to continue on the reverse charge, GST also. So the moment they look at what something as a conveyance charges, freight charges, or transportation charges, there is high likely chance of department straightforwardly asking for a GST and reverse charge. However, the point what we have to remember is that it is not each transportation expenses which we have booked in the books of account is liable under reverse charge. That is not the correct position. The correct position is whenever you directly pay to the transporter or GTA, then only it is liable under reverse charge. Now the point is, in what cases I may be accounting the transportation, but I am not be paying the service charges to the GTA. The example which I can give is, you are procuring a goods and your supplier is charging, is arranging the transportation and is charging over and above your price, which is general trade practice. So their invoice may be having contract sale price of goods as well as transportation charges or freight charges. So you may be, it may be possible that you may be accounting price in direct expenses, and this indirect expenses you may be accounting as the freight charges. Now the point is, whatever the freight charge which I reimbursed to my supplier, am I liable under reverse charge or not? To this answer to this is that, if you go by the verbatim of the notification number 113 of 2017, where it clearly says who pays. So I am not paying for the transportation of the goods. I'm not paying it to the GTA, or I'm not liable for pay to the GTA. So thereby, I am not receiving service from GTA. Thereby, I am not liable for reverse charge under this notification. So this summon substance is that, we have to see whenever some freight charges or transport charges are reflected in the books of accounts, whether it was directly paid to the GTA, or it was only reimbursed to the suppliers or the dealers or distributors. So all these cases, these reimbursement cases will not be liable under reverse charge. And in support of this, there are quite a lot of decisions under service tax regime. And I just quoted one Delhi tribunal decision in case of Sumangalam Shootings Private Limited, where the similar facts, the tribunal held that it is not liable under reverse charge because he is not liable to pay freight. Then the same this is number one issue. So next, number two issue is that, if you see the exemption notification number 12 of 2017, if you see, there is an exemption where it says road transportation of goods is exempted, however GTA services are excluded. Now the point boils down is, in what cases it is a road transportation, and at the same time it is not a GTA. So now to get answer to this question is, we have to look at what is the meaning of GTA. GTA was defined in the same notification, where they defined that GTA means any person who provides service in relation to transportation of goods by road and issues consignment note. So this is the point which is been creating a disputes and litigation and creating confusion even now. So the point is, if you look at the definition, it says it covers the two parts. One is that the person should provide services in relation to goods transportation. Second is that he must give a consignment note. Now the whenever you pay any amount to the transporter, whether you treat him as a mere transportation services or GTA services, without getting into this definition, generally goods transport agency is understood as he is acting as agent between the actual transporter and the recipient of the transportation services. So that's the reason those cases are maybe getting covered under reverse charge. If you look at service tax provisions, where the similar provisions are there, so they are also there in the year 2004, when this reverse charge was brought on transportation. Finance Minister himself is, in a budget speech, is told that what he is trying to tax is only on the agency services. He is not taxing the individual or private operators of the transportation vehicles. That means, if I have a 3-4 vehicles and I'm giving vehicles for on hire, or I'm doing transportation for the certain particular company or client, they said it is, government is not intended to tax those cases. Government is intended to tax only the cases of agency services. But if you see the definition, it is in a different gives a different connotation. It says, once you provide any service in relation to the transportation and gives in consignment note, you are a GTA. Okay, so going by the requirement of consignment note, the moment I give any consignment note, I will be GTA. So now the point is, how come there are many cases, particularly this small consignments or the local transportation. Many times what happens is that they won't give any consignment note because it's a local transportation. So now, if in absence of consignment note, can somebody say that it is not a GTA services, thereby I am not liable under reverse charge. So to answer this, if you strictly go by the definition, yes, you can say. However, the problem that comes is that it is always in this scenario the difficulty comes is that, so you are saying you did not give the transport did not give a consignment note. The department presumes that no, they have given a consignment note, because but you are not submitting it to the department. So they are rebutting your factual position that there is a consignment note, but you are not giving it to the department. So there is a dispute on the records which was not submitted by the assessee. So this kind of establishing the actual fact would be very difficult in case of transported services, because I cannot prove that, how I can prove that my transporter has not given a consignment note. If he has given a consignment, I would be showing that. If he has not given a consignment note, I can't show that. So I can't prove that he has not given it. So unless there is some confirmation undertaken from the transport agency. Likewise, there are practical difficulties in proving or establishing that he has not given me a consignment note. And many times department assumes or takes the monthly bills or various statements given by the transporter as a consignment note, and they are treating it as a GTA. So what happens? Take an example of real estate company or some infra company. What they do is they engage some vehicle operator. They says, you keep your vehicle in the site for 30 days. I'll pay you this much, and whatever the transportation is required for that within the site or outside the site, your vehicle has to be ready and make available. So that would be the arrangement. And many times what happens that they won't be having any written agreement. So it is goes on most of the times it goes on a oral arrangement or oral understanding. So this 30 days he goes on giving services, and the end of the month he may be giving a bill saying that this month these are the many trips which I have done, so you please pay me this much amount. So department, they're saying this is itself is a consignment note, and they are treating it as GT and asking GST under service tax and reverse charge. So in this background, next slide, Arjun. Yeah, in this background, there are various decisions of the tribunal of under service tax where they said if the consignment note is not given, and just because there are some monthly bills or invoices given by the transporter that cannot be equated with the consignment note, thereby their services are not GTA services and not liable under reverse charge. However, there are at the same time there are contrary judgments under service tax again, where they said uh, just because the violation of the consignment note happened, that means the transporter is bound to give a consignment note, but he has not given. That means he violated the rules. So that doesn't take away the service tax liability. And likewise, there are contrary decisions under service tax also, saying that even in absence of consignment note, it can be said that it is a GTA, because they says the definition says consignment issues a consignment note by whatever name called. If you go back to the definition, it says issues a consignment note by whatever name it called. So they says the consignment note need not be a formal consignment note. Even small lorry receipt or some small receipt showing that this is the service, this is the distance which I have covered, and this is the trip I have done. So that also they are presuming it as consignment note. To summarize the discussion on this issue, as of now, there is a contrary legal decisions on this issue, whether options of consignment notes is a GTA or not. So both the sides there are decisions. So and this is number one. Number two is that practically there is a difficulty in proving that it is not a GTA, because you can't go to each and every expenses or each transport bill and say that he has not given a consignment note. Third is that department is not looking at invoice level. They're simply going at a consolidation and simply asking for a reverse charge liability. So in this light of these difficulties, the advice my advice you to is that wherever you are ready to or able to take ITC of whatever you paid, So if you are able to take that, so please pay under reverse charge and take ITC. If you are not, not eligible for ITC, then you can take a chance of this and you can dispute it in future, because there are contrary decisions which are going to continue under GST also. This is second. The third point is, let's say you are eligible for ITC, but you have not paid till now. So in this context, so many times the question comes is, okay, now I'll pay it along with interest or without the interest, whether I'm able to take ITC or not. So in my view, you can still take ITC. Even that 16 for time limit is not going to apply, because that gives links with the invoice date. Invoice date is in case of reverse charge, that too under unregistered reverse charge, your self invoice will be the invoice, and self invoice you raise today and take it. So 16.4 is not going to hit. However, this is my view. So I think this further deliberation will be done by the speaker who is going to take on ITC session. So to summarize, if you are eligible for ITC, better to pay and take ITC. If you are not eligible for ITC, you can take a chance. If you are for the past liabilities where you wanted to pay and take ITC, you can still take a ITC on this transportation expenses. Next, Arjun. Yeah, this is again a very popular disputes which is there from the beginning of the GST, and which is fortunately it is settled in favor of the, or not. I don't say it's settled. Sorry for the bad language. It is decided by the Gujarat High Court in favor of the taxpayer as of now. So the issue is that, for the people who are not aware of this background case, I'll just explain brief it. So the point is, if you look at the ocean freight, what happens is that I'm a importer, and I may be importing goods from outside India. So now what I'll do is, I have generally there are two varieties of practice. Is that one variety is that I'll say I'll enter for a FOB price. That means my supplier will hand over the goods at the foreign port, and from there I have to pick up the goods and I have to transport it to India, and from India I have to clear to my factory from Indian port. So this is one variety of the practice. That means in this case, transportation from the foreign load port till the Indian port, I am only getting the transportations. I am only engaging the transporter or shipping line. Take an example of scenario of another variety of practice is that I'll enter into a CAF price. That means I will not be doing any. My supplier is going to deliver the goods at Indian port. So till the Indian port, the entire transportation is the responsibility of foreign supplier. So in this second scenario, the shipping line, shipping services will be taken by the foreign supplier from foreign load to Indian port. So this in this background, when government trying to tax on this services, in case of FOB anyway, because recipient is in India, he is going to pay under reverse charge. If supplier is from outside India, if the supplier is anyway is in India, of course he is going to charge. That means shipping companies in India, they are going to charge the Indian company. If the supplier is from outside India, they are going to recipient is going to pay under reverse charge in case of FOB. Let's take an example of take a scenario of CAF. CAF, if you see, first point is that if the shipping line is from outside India, that means the transporter is outside India, then the transporter is outside India, and the recipient of the transportation service is, who is the recipient? Recipient, if you see, because recipient is the foreign supplier, because he is appointing him and he is paying for price for him the shipping services. So that means both are outside India. So thereby, many after this reverse charge is bought in service tax, what people have done, shipping line companies or the importers, what they have done is that they have started converting these contracts into CAF contracts, and thereby they will be able to save the GST on this transportation and reverse charge. So this is one. The other reason is that while importing the goods, and I'm paying customs duty and IGST on the customs, including custom BCD. So there, as for the customs valuation rules, I also have to add back the freight charges till the Indian port, till it reaches the consignment reaches the Indian port. That means this freight charges are already part of customs value. and paying not only BCD, I'm also paying IGST at the time of import. So in this background, there are two questions that has come. Is that first is that whether practice of imposing IGST at the time of import as part the freight charges are already added to the consignment value and I'm paying IGST. This is one. Second time, the separately you are asking me to pay again on GST on the when I pay on CA price. That means you are asking on the same transaction, you are asking me to pay GST two times. That means it is leading to double taxation. This is one issue that was raised. The second issue that was raised is, if you look at the section 5.3 of the IGST Act, it says recipient will be liable under reverse charge for the notified services or goods. If you look at the CF arrangement, the recipient is not Indian company, it is a foreign supplier. So Indian company who is importing the goods on CF price is neither a supplier nor the recipient. Then how come a notification which makes the a different person who is neither a recipient nor a supplier for liable under reverse charge? These are the two questions which are challenged before, just framed before the Gujarat High Court, where they have analyzed this Mohit Mineral Private Limited. Gujarat High Court has beautifully analyzed the provisions and they have taken all the possible arguments of the both the sides, and they have finally held that Section 5.3 only gives power for reverse charge on recipient. So the notification which imposes reverse charge on the Indian importer who is not a neither recipient nor a supplier is not correct, and they have struck down and they have held it is unconstitutional. And not only this, this section, if you see that Mohit Mineral judgment, they have touched upon various incidental issues relating to the time of supply, valuation, and ITC. So they said that Arjun, next slide. Yeah. So they says that if you see they analyze the GST provisions, they said section 7 and 8 of the IGST, which talks about how when in what cases whether it's any supply is interstate supply or interstate supply, is not covering the particular issues because both are supplier and service recipient are outside India. Thereby, you cannot make it as a particular this transaction as a interstate supply or intrastate supply. Thereby, so the IGST provisions will fail as well as CGST provisions also are going to fail. So this is the one very interesting point. And also they also said that Arjun, I think one slide is missing in between. I think next slide then. Next slide. Yeah, this. They said even if you still look at the time of supply provisions and valuation provisions and ITC provisions, I'll come to the ITC bit, which is interesting. So in returns provisions, likewise, if you see all provisions of time of supply, valuation, and returns, they are only covering, they are only trying to cover either the supplier or recipient. And they're if you bring some third person other than the supplier recipient for under reverse charge, it will be for him he cannot comply with these provisions. Thereby that mechanism of levy will fail, thereby equally levy fails. So that is the rationale which they have held. So because if you see section 12 or 13 of the CGST Act, time of supply provision says either you have the date of invoice or date of the receipt of payment or date of entering the books of accounts. Likewise, there are scenarios which are determined which cannot be which are not in the control of the third party who is not a party to the particular transaction. Even valuation also same problem is there. So very interestingly, even for ITC also they said because section 16 says the recipient will be eligible for the ITC. So if I have to receive the service and goods to take ITC, so if I am not neither a recipient nor if I am not a recipient, then I am not eligible for the ITC under 16. Thereby, whatever I pay under this reverse charge, I'm not going to get ITC, because the government has taken an argument that whatever they are paying, they are getting ITC. So they are not badly hit by this provision. That's what one of the argument they have taken. So to counter that, the argument as well as which was accepted by the High Court, that Section 16 does not authorize the other than recipient to take ITC. So this is what the summary of the this Gujarat High Court. So they finally held that this reverse taxing the or imposing the GST on importer who is neither a recipient nor a supplier for the CA contract on the vessel transportation is unconstitutional, and it was ultra vires the IGST provisions. Hence, it was struck down. So this is the result of this High Court decision. As of now, the Supreme Court has no, they have gone to department. I think is in the process of going to High Court, but as of now, it was not stayed. So in absence of stay from the Supreme Court, as of now, this is going to hold the field. Thereby, any liability which is not paid on the social freight, they can take a shelter of this High Court decision and they can say, I am not liable for GST under reverse charge. Now, there are consequences of these decisions. Next slide, Arjun. Yeah. Now the point is, okay, it's fine. If I have not paid, okay, I'll take this benefit of this recognition and I may take a chance. I'll say I'm not liable. So what if I have paid and taken ITC? So the why I have put this question is, if you see the one of the finding as well as which is which is apparently coming from section 16 also, only recipient is eligible for the ITC. Now the point is, because there is a notification of the government and I paid, and because I'm going to get ITC, I paid and taken ITC. Now the court said, the recipient, other than recipient, can't take ITC. So in this background, what if I have already paid and taken ITC? Will it, am I have to reverse the ITC which I have taken earlier? To answer this, my point is that you need not reverse ITC as long as the department did not dispute the payment. That means there was a settled jurisprudence under pre-GST law where they says, when government has accepted liability on one side, they cannot come on other side and say it is not liable, so you have to reverse the ITC. That means, to give a background, so there are central excise provisions. What happens? There are some exchangeable, non-exchangeable goods where to our clarity or confusion or the ambiguity, the manufacturers have charged excise duty and the recipient has taken standard rate of it. So what department has done? They have not gone to the manufacturer and has said, look at, you paid wrongly excise duty, should not have paid. They have not done that. What they have done is they have gone to recipient and they said, this excise duty itself should not have been paid by your supplier. So you are, which is not an excise duty, you can't take a standard credit. In this background, there are various judgment of the Supreme Court as well as High Court, particularly Supreme Court in case of MSD switchgears and followed by various High Court decisions. As I said, when you accept a liability on one side, when you coming to ITC, you can't say that it is not liable and I will not give credit. So that rationale is going to hold good even for GST and particularly in this case. Thereby, if you already paid GST and taken ITC, you not worry about it unless it is department comes and dispute it. Of course, when they get a money, why they will dispute it? So they not worry about it. That is the conclusion which I can say. Next point is, let's say you paid it, but you have not taken ITC. So now, or else you wanted to go for the refund. Now the point is, how this refund will be given, because if you look at 2017 is more than a part of the period. Let's say we are now in May 2020, because this is nothing but excess payment of tax or wrong payment of tax. Thereby, so I have to apply for refund. If you go by section 54, within 2 years from the date of payment of tax, if you apply that relevant date given under section 54, whether that payments made before May 2018, that means April 2018 payments, is it time barred for refund or not? So in this background, if you ask me, so there are High Court decisions are as well as Supreme Court decisions case of Mahatlal, wherever any taxes are held to be unconstitutional, then are ultra vires of the provisions. They said it cannot be, the limitation will not apply they can be applied it can be refunded without applying the limitation under the section 11B of central excise, which is nothing but a replication of the section 54 of the CGST Act. So if you adopt those principles here, you can say that because the levy itself was held to be unconstitutional by the Gujarat High Court, you can take refund without applying this 2 years time limit. However, the earlier the time you apply for refund, the earlier we are in a advantage position. In fact, that's the reason if you see there are various petitions are filed before Gujarat High Court asking for a specific direction from the court to the department to say that to you process the refund within 2 weeks or 4 weeks or 6 weeks, because they wanted to get out of this glitch of department coming and saying that it is time bar and I will not give refund. This is another consequence. The third is, let's say tomorrow government makes a retrospective amendment or Supreme Court has reversed and maybe a different ground. So what will happen if that retrospective amendment is bought or Supreme Court reverses the decision? So as usual, whenever retrospective amendment is bought, so they may be giving some window for the some period to pay or to comply for the people who are not complied. So of course, people who have complied, they need not worry about it. So that you can see. Let's say if tomorrow Supreme Court reverse, then the people who has taken the benefit of this Gujarat High Court, they may have to carry that risk till that Supreme Court gives a finality. Next, Arjun. Yeah. So with this, now we'll go to the third issue on the reverse charge, which is director services. As explained in the yesterday session, if you are able to establish that director director is acting as a employee in the company and he is taking various responsibilities and there are contractual obligation from the director to the company, you can say his services are not liable for GST, not only in the hands of he is in his hand. It is not only first of all, if it is once it is not a supply, then there is no question of reverse charge. That is going to be still there. I'm not extending that discussion. What I'm discussing today is that let's assume he is not a employee. Let's say take an example of some independent director or some non-executive director who is not acting as an employee, and even for income tax purpose also is making it as a professional services and the TDS being deducted under 194J of Income Tax Act. Now the question falls for consideration is that, say, okay, if he is not an employee, so definitely I have to pay under reverse charge going by this notification by the company has to pay under reverse charge. Let's say the same director is getting company is paying remuneration as well as sitting fees or commission to the director. Now, over and above this, the same director is giving his property. Let's say he is giving different services which are not all linked with his directorial capacity. Let's take an example of director is giving a his property to the company on rent, or he is a professional guy and he's giving a professional services to the company which is being billing separately. So all these services are not in the capacity of director but in a independent capacity of the not being a director. So in this background, the question that calls for consideration is, if you look at that RCM notification, it says services supplied by director of a company to the such company. Body corporate I'm just ignoring because both more or less replaceable. So if you look at whether this RCM is only applicable for the director services or all services supplied by the company. So if you see that what is the notification, it is not very clear. One way of looking at is that it says services supplied. So service supplied by director of a company. So that means it is not saying only the director services. It says once you are a director and you are giving service to the company, all services are reverse charge. This is one way of looking at. The other way of looking at, if you have to look at a whole thing, it says service supplied by a director of a company. That means I have to supply service in the capacity of director. Thereby, if I am not the renting of property rent as well as the professional services, I am not doing in the capacity of director. Thereby, this reverse charge notification is not going to apply. So both views are possible and plausible as of now. And till now, there is no authoritative decisions or the advance ruling on this point. But certainly, both views are possible. You can wherever depends on the facts and circumstances, and also the eligibility of ITC. One may take a stand. Next slide, Arjun. Yeah. Now another very controversial, I might say controversial, I may say very ambiguous entries in reverse charge is that services of government. If you see serial number 6, it says all services of government under reverse charge if you are there giving it to any business located in taxable territory. So the first question is that, see, is that all amounts paid to the government or local authority are liable under reverse charge? I mean, my reference of government includes central government and state government and local authority also. So now the point is that, okay, there are some exemptions given under exemption notification like registration and this pollution fees, etc., etc. I'm not getting into that exemption entries discussion in this section. I'm only saying I'm only wanted to discuss, first of all, is this that whatever the payments I made to the government, be it a license fee, be it a permission fees, be it a registration fees, be it a processing fees, everything, I may be paying a lot of money, a lot of payments to the government for various reasons. So is this all these payments are for a services from the government? But to understand this, so is this a is a services or is a supply at all from the government to the business entity? First of all, is in the course of business. So here we have to understand, it is not, you may be in the business, but you should not because this is reverse charge. So we have to look at the supplier should be in the course of furtherance of business. If you remember, yesterday we discussed the case of old gold ornaments. The individual who is selling the old gold ornaments, he is not in the course of business. That's the reason they said it is not liable under reverse charge even in the hands of recipient who is buying the old gold ornaments. So they said the business require in the course of furtherance of requirement has to be seen from the supplier perspective, not from the recipient perspective, even for the reverse charge provisions also. In government themselves, they said in the press release. So applying that point, and also here is that we have to look at whatever the payments we are making to the government. Is it government is making, is first of all, is there any supply at all? Next, whether it is in the course of furtherance of business. Next, there are various connected questions. Many times I don't, as a recipient, I don't have a choice to go anywhere. I have to pay this money and get rid of this. That means if I have to go and apply for any processing, application processing, I have to pay amount to the government only. I can't pay to the somebody else, and I can't choose in between. So I don't have choice. And there is no privity of contract. That means I'll pay this much this month, and they have to give me that. There is privity of contract is not there, and there is no consideration. Consideration is prerequisites that there should be a benefit to the supplier who is giving services to the recipient. In this case, what government is going to get benefited? They are only administrating, they are only controlling or conducting the administrative functions. They are not getting benefited because of processing fees. Let's say you pay some ROC filing fees. What government is going to get benefit out of it? They are not going to get benefit out of it. They are only controlling the affairs of the company administration. So likewise, there is no reciprocal obligation between both the persons. It is only one way traffic, I say. So likewise, various critical essential requirement of legal contract is missing in case of various payments made to the government. So all these points are helpful and are very essential in saying that the many times payments made to the government are not a supply or not a services from the government. Therefore, when there is no service, there is no supply, there is no GST at all. What Forget about reverse charge. First of all, there is no levy of GST at all. So next slide, Arjun. So these are the various decision under service tax regime where they have held that whenever any I think before this slide, we'll go to next slide. Next slide, Arjun. Yeah. There are various decisions which instead of giving the entire list of the decision, I have given 2-3 decisions which explains that uh, it is not that all payments are in the, to the government are only in the statutory payments and all that. Sometimes government also do the services. So there may be some, let's say the government has some land and they are giving property to the that land to the private parties for development, or they're saying, you can take it on rent and lease. So that means they are not doing any statutory obligation. They're only just giving it and they're getting the commercial rent. That means there is some service from the government. There are some cases where government also does the services, so are the any activities. So to differentiate between whether when it is a service or when it is a not a service, we must understand the concept of tax versus fee. So there is a lot of jurisprudence available on this concept. Whatever the amount paid to the government, when it can be a tax, when it can be a fees. A tax is nothing but statutory payments, I say. It is only a short form of the statutory payments. So if it is a fee, it is a services for the services or the activity by the government. Thereby, in that case, it may be liable under reverse charge unless it is exempted. So if it is in the nature of statutory payment for tax, then it may not be liable under reverse charge because it is not a services. So there are various decisions. Just to the decision which I have given it for your reference, which you can go through. So taking this clue, they says if it is in the at the same time, it is not always that when somebody says processing fees, doesn't mean that it is only fee. Sometimes maybe a statutory payments also. Sometimes it says so and so duty. So they says nomenclature is irrelevant. What actually is happening is relevant as a holistic view of the facts and circumstances which you have to look at to see whether there is any services by the government or not. So likewise, there is again Delhi High Court decision in case of all India Garment Export Common Cause. There also they said you have to look at the facts and circumstances. If the fact context gives an indication that it is in the nature of statutory payment or statutory tax or levy, then it cannot be a fee or it cannot be there cannot be services. Then there is already again as explained in the yesterday session by Anil, that the mining royalty, whether it is a tax or statutory tax or not, is pending before the nine judges bench of Supreme Court as of now. And there are contradictions saying that one decision is saying that it is in the nature of tax, in the nature of uh, not in the nature of tax. So where maybe that decision which the nine judges bench of Supreme Court, they may going to give us some principles in saying that in what cases it can be a tax, in what cases there may be not a tax. So till that time, this issue is going to be in limelight and is going to be disputable. And many cases wherever royalties are paid, let's say mining royalty or fishing rights, etc., land rights, the already there are government started demanding service tax, saying that it is a services by the government. The similar demands are going to come under reverse charge under GST if you are not already paid. So however, but if you are able to give a contextual color that it is in the case in the nature of statutory payment or in the statutory fee, statutory tax, you can get out of this reverse charge and you can say it is not a service from the government. So while adopting these principles, there are some decision in case of service tax. Just go to previous slide, Arjun. Previous slide. No, next slide. Next slide. Yeah, these are the decision which I have given it, where this they are No, ma. Previous slide. This Municipal Corporation of Rajahmundry, as well as this Efficiency Bureau, Bureau of Energy Efficiencies, as well as Deputy Director of Forest, where they analyze this all this kind of scenarios. They said if it is in the nature of statutory, previous slide, Arjuna Raji, so that participant will see that principle they are explaining. So if you see that Bureau of Energy Efficiency, they said if it is a prefixed or pre-notified amount and also the collected as a matter of statutory performance of the law, and the amounts are going to government, and government is having the control over that inflation of the fund, all these are indication that it is not a services by this particular bureau. It is only in the nature of statutory payments. So they said it is not liable for service tax. The same rationale is going to apply for this GST also. So to summarize, the discussion is that if it is not that all payments made to governments are for the services received from government, and at the same time it is not that all payments made to the government are not for the services. There may be some cases where you may be getting services from the government. So it depends on the facts and circumstances in what way or the what circumstances you are paying amounts to the government. So, and there is already various jurisprudence available on this concept. So practically, if you ask me, wherever you are eligible for the ITC, I think you may pay. If you are not eligible for ITC, you can take a chance of this interpretation and say I'm not liable for reverse charge. Next slide, Arjun. Next slide. Yeah, yeah. Next slide. So it's a same slide. Yeah, this royalty for the land rights. Now here the point is to give a background. See, for example, if you wanted to extract any mine from the land, so government has to give a license and you have to pay a mining royalty to the particular corporation or the government. So you are paying this royalty for the mining rights. So the point is, okay, there is already a principal question which is I discussed yesterday and also I just briefed now, saying that there is a interpretation possible that it is not a service from the government. It is only in the nature of statutory payment to the government. So it is not at all liable for GST. First of all, there is no question of reverse charge or forward charge. So assuming that question may not, that interpretation is not correct, or government has, excuse me, proceeding with an assumption that that is not a in the nature of tax or statutory payment, but it is liable for service tax or GST. First, then we have to see the whether that is liable under reverse charge or not. So why I'm giving this question here is, if you see up to January 2018, the government services reverse charge for government services excludes the renting of movable property. So that means if it is a renting of movable property, it is not under reverse charge, it is under forward charge. So of course, after January 2018, that was again brought it under reverse charge. That means in a different entry. Now the point is, whatever the royalty I paid to the government, so is it in the nature of renting a movable property or not? If you see the what is renting also is defined in the same notification. Of course, it was at a later point of time where they says renting a movable property means allowing, permitting, granting access, entry, etc., in an immovable property with or without transfer of possession or control of the said immovable property, and includes letting, leasing, licensing, other similar arrangements in respect to immovable property. If you see the renting of immovable property definition, it can cover this mining license. Thereby, we can say up to 2018, January 2018, whatever the amounts paid to the government as a part of mining royalty is not in the nature of renting or removal property. It is not falling under reverse charge. It falls under forward charge, and recipient is not liable for GST and reverse charge till January 2018. Of course, for service tax, entire period you can take that difference. From January 2018, this difference is no more relevant, because that also they brought it under reverse charge. In fact, there is a Rajasthan High Court with decision where they, of course, they are not clearly held, so they have said it may be in the nature of renting, which can relate. So to summarize, the discussion is that uh, assuming mining royalty is a service from the government, it can be till 20th January 2018, we can say it is not liable under reverse charge because it is in the nature of renting a human property. Next slide, Arjun. Next slide. Yeah. One more issue under reverse charge is that, see what happens, this SEZ units, as you are aware, SEZ units are developers, or whatever services they have done by themselves, or the supplies made to SEZ units or developers are treated as the zero rated supplies as a by section 16. That means they said supplies made to or by the SEZ units or developers is a zero supply. In this background, whether they are SEZ units or developers are liable for reverse charge or not is the question that comes for a consideration. To answer this, we must see whether it is intrastate supply or interstate supply. To the law on this, at least on this point, is that it is very clear, because section 7(5) as well as exception in the section 8 of the IGST Act clearly says that whatever supplies you made to SEZ are interstate supplies. So thereby we need not get into the reverse charge notification under CGST. We have to confine our reverse charge notification under IGST. So now the question is whether when section 16 says supplies to SEZ are zero supplies and it can be done under LUT without payment of tax, so whether SEZ units are liable under reverse charge or not. So if you take an example of SEZ unit, or they are landed in some dispute with the private party and they taken a services of advocate. So definitely advocate services are under reverse charge and business entity has to pay GST under reverse charge. Now the point is SEZ unit are liable for reverse charge or not. To answer this, if you see section 16 very clearly says it is zero supplies and you can clear without payment of GST and under LUT. So SEZ already they are executed LUT because their output turnover is anyway exports. So thereby section 16 itself is a sufficient shelter to say that they are zero supplies. They are not liable for GST even under reverse charge or forward charge. So to substantiate this submission, there is section 5(3) which talks about, which empowers the government to give a reverse charge notification. It says the provisions of the section law will applicable as if the recipient is liable to pay tax. That means the all other provisions is going to apply for the recipient as if he is the supplier. That means thereby whatever the reliefs given for supplier in claiming exemptions or durate supplies are equally applicable for the reverse charge transactions also. Thereby that can be still said it is not a live and reverse charge in the hands of SEZ units and developers. Of course, there is another. There are other two more arguments in favor of this. SEZ Act in a way is in overriding effect of the law and all that. So you can refer. You can also refer the GMR Aerospace Engineering Limited of the High Court decision. Of course, not only this, there are various katana of judgments are there on this issue. Whenever there is any conflict with the SEZ provisions, or when SEZ Act provisions itself gives a relief from the taxation, the tax laws cannot indirectly tax it. So thereby, so to summarize, SEZ units or developers are not liable for reverse charge, and it will be still continued as a durate supplies even for a reverse charge transactions. Next slide, Arjun. Yeah, this is one more issue, is that, see, I'm not getting into this validity or invalidity of the place of supply. Let's take an example of the Indian company is paying some commission to the foreign agencies. So there are some agents appointed outside India and they are located outside India, and for whatever the export orders they are getting by the Indian company, they are paying some commission to the foreign agent. Now the question is whether that services of that foreign agent is liable for GST and reverse charge in the hands of Indian company. Because if you see, once he is intermediary, his location will be the place supply. So he is located outside India, and location supplier is outside India, and place supply is outside India. Thereby, if you see section 7 or 8, except 75C, that section cannot cover any scenarios like this. Thereby, it may not be in the nature of interstate supply there or intrastate supply, because intrastate supply requires both should be in same state, that which is not possible at all here. Either if you go to interstate supply, it should be in the at least something should be in the in India, except recipient being located in India, there is nothing. And place of supply and location of supply both are outside India. So in my view, even 75C also will not apply. And not only this, before this, we must look at the extent and application of the IGST Act provisions or CGST Act provisions. It only says it applies to the all acts, except to the India. So if the services are supplied in outside India, and the place supply also, you say citus of the supply is outside India, thereby government themselves are accepting that citus of supply is outside India. So for if, when government themselves deems that their citus of supply or the usage of supply is outside India, or origin of the supply is outside India, they can't say that it is consumed or it is supplied in India. So yeah, and this is also supported by the definition, relay decision in case of Indian Association of Tour Operators, which is in case of service tax, where it says when the section 64 of the Finance Act only applies to the services in India, so they can't levy service tax on the services supplied to outside India. So though there is a there is a contrary argument possible taking the Q of 75C, because it says supplies made in the taxable territory. Made in the taxable territory, how should I take a basis? So is it just because recipient located in taxable territory, can I say it is made in the taxable territory? Or just because ultimate consumption is happening here, should I take? In my view, it is not so, because if you look at clause A, clause B of the 75, they are already covering the scenarios of where supplies which are remotely connected to India also, they're trying to connect here. Just because if you look at once you for determining the consumption, the principle of place supply may be relevant, not the recipient location, because in many cases government themselves by law they said place of supply for certain services will be the location of the performance, location of the supplier. They have done away with or they have dispensed the requirement of recipient location for the place of consumption or place of supply. When government itself or by indirectly by the law, they're saying that I am deeming the consumption is happening particular place for tax in this in that applying that analogy, you cannot say that recipient located in India, I'll assume consumer is here. Thereby, to summarize, we can say when the player supply as well as supplier are located outside India, we can very much say that the supplies are not happened in India, and section 1 of the IGST Act are not going to apply. Thereby, first of all, the extent and scope itself is missing on this provisions, and IGST is not available on the commission paid to the foreign agent. Next. Yeah, this one more initial controversy of GST, where is very paining point or paining compliance in the initial year of GST, particularly first 4 months. To give a background, section 9(4) or section 5(4) of the IGST Act provides that when you receive any registered person receives any supply from unregistered suppliers, are liable to be liable under reverse charge, and registered person has to pay under reverse charge. So however, because once this provision actually implements, each rupee paid to the unregistered supplier, let's say, to take a small example of their T expenses of paying 1,000 rupees to the or 100 rupees to the tea vendor who comes and serves a tea for their workers or the staff. So that also may come under reverse charge by virtue of this provision. However, luckily and understanding this provision, there is a initially they have given notification saying that uh, all services received from the unregistered suppliers are exempted from 9 RCM under 9(4). However, they have given a provision saying that the exemption is only applicable if it is expenses are not exceeding 5,000 rupees in a day. That means the combined effect of the preamble of the notification as well as the entire notification is that if it is the moment once you spend more than 5,000 in a day for unlisted procurements for services or goods, you are liable for reverse charge on the and under section 9(4). So, however, because of this, there are a lot of difficulties and problems being faced by the taxpayers in compliance of this section. So, understanding these difficulties, the council has discussed on the various alternatives and various dimensions of the problems and challenges. So, they finally what they have done that in October 2017 they omitted that provision. So they said that 5,000 which is giving a cap for the exemption they omitted. Thereby the section the notification number 8 of 2017 which says that all services of falling under RCM under section 9(4) exempting is they're given it without any threshold limit. That means from 13th October 2017 all reverse charge under section 9(4) is exempted. So you are not able for unleashed RCM. That is the result consequence of that. However, while doing so, what the notification number 38 of 2017 has done that they have just said that provision of threshold limit of 5,000. They said it is being omitted, and while giving this omission, they have not given any savings provision. If you see any amendments in any notification, they says they'll give a saving provision in the notification itself. They says except to the things done or to be done before before or after the issue of this notification, they're going to save that actions. That means basically they are giving a saving clause for the past actions or past complaints. However, if you see this notification number 38 of 2017, government has intentionally or unintentionally they have not done that saving provision. Thereby, one and also if you see that entire section 9(4) and 5(4) was amended later to say that it is not all unregistered RCM. It is only notified or selected RCM under or liable under reverse charge if it is procured from unregistered persons. So this is the background. So in this background, the two questions that will fall for consideration is that in absence of notification where they says this threshold limit is omitted from 13th October, whether that will give a retrospective or prospective effect. That means this exempting the all RCM under section 9(4) is applicable from only from 13th October or even for the prior period also I am exempted. So to whether it is a prospective or retrospective, if we say prospective, okay, I may not be liable under reverse charge unregistered RCM from 13th October. If I say it is retrospective from 1st July 2017 itself, I am not liable for reverse charge on unregistered procurements. So to answer this question, I'll go to next slide. Go to next slide, Arjun. There are principles set out in the exemptions interpretation of the exemption notification. The general principle is that the government itself gives a notification, the commencement of the notification. If you see any notifications, they'll say this is going to come into force from so and so date. So here again here how saving clause is missed. Here again they are not specified the when that notification is going to come into force. Second, thereby the general principle they are done away with. Then there is another principle where when nothing is mentioned, the publication date will be the uh, effective date. That means if government has not specified the when is this is going to come, then either future date or past date, then the publication date will be the effective date. Thereby, from that date, it's going to give effect. However, So to this, there is an exception which says that considering the facts and circumstances and past actions, objectives and purpose and intentions of the exemptions and the background, there are circumstances where the courts themselves have held that this can be treated as a retrospective operation, particularly when the government is trying to correct the mistake, or when they trying to remove a burden of the taxpayer or the burden of any point. So in that background, they, various decisions held that it is can be a retrospective operation because it is trying to remove the or correct the mistake what is unintended. So considering this interpretation as a whole, in absence of the effective date in the notification, as well as the considering the fact that this is what's intended to remove the burden of tax compliance burden, as well as the practical difficulties in compliance the provision, and which is supported by the at length discussion in various council meetings in GST council meeting, we can say it can be treated as a retrospective. And from 1st July 2017, that reverse charge for the unlisted procurement is exempted for all, irrespective of threshold limit is exempted. Now the point is that before we get into the practical thing, I wanted to discuss another dimensions of this saving clause. Just go to next slide. Yeah. So now, if you see that, as I was mentioning, the notification now never talks about never saves the past actions. So in that context, if you look at the General Clause Act, where they says there is section 60A, where section 6, which says whenever any omission or repeal happened, the past actions are going to be saved by this section 6 or 6A of the General Clause Act. Now the point boils down is that whether that General Clause Act is going to save only the repeal of the or omission in the enactment, that means statutes, or it can save the actions or the omissions of the notifications or rules. There are Supreme Court decision in case of Rayala Corporation as well as the Kolhapur cane sugar, where they held that the savings of General Clause Act for the due to the whatever the past actions due to omissions of the or repeal of the provisions will be saved only if it is coming through a enactment. If it is rules or notifications, these provisions or saving provisions of General Clause Act are not going to apply. So even if you bring that General Clause Act into picture, that will not help the department to say that that was provisions, past actions were saved. Thereby you can conclude and say that that the notification which given in 13th October 2017 will be a retrospective effect, and I'm not at all liable for GST on unregistered procurement from 1st July 2017. The impact of this is that people who have already paid and taken ITC or whatever it is, they need not worry about it. Or in fact, they can try for a refund if they have not availed ITC. Second is that the people who have not paid, you would have, many people, many of us chartered accountants would have, come across while finalizing the GST 9 Cs for 17-18. Many people would have knowingly or unknowingly they have missed out of this complaint. There they can take a chance of not paying GST and reverse charge, taking this interpretation into consideration. Then next slide, Arjun. Yeah. Another reverse charge given under for real estate. This is given under section 9(4) of the CGST Act, which talks about unregistered RCM for a specified goods or notified goods or services. This basically says if the real estate if the builder or the developer opts for a 5% scheme under GST, where you will not get any ITC. So there are various conditions which are there in the notifications, which are many times practically not difficult to comply. So this one of the condition for that 5% scheme is that 80% of the procurement must be made from a registered persons. If you are not made 80% of the procurement, whatever the shortfall is there, that shortfall is liable under reverse charge, and the builder or developer has to pay GST at 18% if it is cement and capital goods, that respective rate. For other than cement and capital goods, it is at 18%. In this background, the issue which I would like to discuss is that, let's say there is a 1 crore expenses or 10 crores expenses are there. Out of 10 crores expenses are procurements. Let's say there are 2.5 crore interest was paid to the banker or the finance company, and there are some staff cost. So in this background, whether if you look at out of 100%, 25% is the interest cost, that means which is exempted from GST. So if you apply this reverse charge notification, this says whatever the shortfall, if you look at the shortfall, there is a shortfall because the interest cost, let's say that interest was received from a uninsured person, so you are paid to uninsured person. So in that context, so if you see that, so if let's say if the shortfall is, there is a shortfall of 5%, if you strictly apply this notification, there is a shortfall of 5%, you may have to pay GST at 18% on that shortfall. Now the question that comes is, when if I if I get it from a richer person, I'm taking exemption and I'm enjoying it. Just because I have taken it from an uninsured person, whether this reverse charge notification can override that exemption notification and provide for a GST liability or force a liability on the recipient. That is the question that which I would like to discuss in this on this point. I would like to give one principle where this says, which is a settled principle, where this says what cannot be done directly cannot be allowed to be done indirectly, because it will go against the statute. So this principle can apply and say directly, which is government cannot directly tax the interest income by virtue of this shortfall of 80%. They cannot indirectly tax it under reverse charge. So I have just only given the example of interest cost. There are various expenses which may not be liable for GST in the normal course, but because of 80% condition, they may government may try to impose under reverse charge. Is one issue. The one more issue is, of course, this is only for some intervention period of 1st October to 1st of April 2019 to 1st October 2019. If you see that rate notification, where the one of the condition for 5% or 1% is that you should, apart from the 80% shortfall, if it is for a cement, all 100% has to be procured from registered persons. That means any procurements of cement from uninsured taxpayer is under, not under, it has to be paid under reverse charge. However, when you come to reverse charge notification, which is notification number 7 of 2019, that wordings are different. They only say shortfall of cement of 80%. That means when rate notification says 100% you have to procure from registered person condition, but when which notification which fixes the liability and reverse charge, it only says shortfall of 80%. So because the liability is coming under reverse charge notification, not under rate notification, condition of the rate notification, you would have taken you can take a interpretation that from the 1st October 2019 till 1st October 2019, I can still say that the cement also 80% only I have to procure from each person, not 100%. So if there is shortfall of 100%, I need not pay under reverse charge as long as I am falling with the 80% condition. Of course, this is only for intervention period. Next slide, Arjun. Yeah, this I'm going to cover in upcoming subsequent slides. So I'm just skip it for a moment. Next slide, Arjun. Yeah. So as far as the another issue is concerned, time of supply. See, what happens is that this may happen in many cases of government contracts. So they say, so you are eligible for some price escalation considering various factors. So, but at the time of making supply, the price would not be finalized. So what I would be doing is, I may be doing for a provisional price. Let's say agreed price, bid price is 1,000 rupees per metric ton. I may be doing that, but in the course of the contract, there is a possibility of escalation which I have asked for it. And government, because it takes time and very slow in deciding the rate, they may take some time, but at the same time they won't entertain me to stop the clearances. They ask me to clear the goods at a provisional price. So let's say I clear it on 1,000 rupees per metric ton, and after 3 months or 6 months or whatever the 1 year, I that price was the escalation clause was finalized, and they said that the 1,000 rupees per metric ton is increased to 1,200 rupees per metric ton. Now the question that comes for consideration is, whatever the 200 extra amount which I'm getting extra in future, whether is it a liability of the original clearances, and should I go back and pay GST along with interest from that day, or is it enough sufficient to pay GST from the date of that escalation or additional price which I received in after 6 months, in, let's say. So in this scenario, if you look at section 34, which says that whenever there is a less amount charged than the actual amount, they says you can give a debit note and you can pay GST as the manner prescribed. Now the question is, if you simply go by the debit note provisions, there section 34 is not, of course, is not very clear on that point, that when should I pay, is it okay, is it sufficient to pay GST only and without any interest on the date of debit note. At the same time, if you even if you see section 12 and 13, they also never talks about that the price must be final or must be the same actual price and all that. So there is ambiguity. But if you apply the holistic provisions of GST, it is only a debit note date which has to be considered at the time of supply, not a section 12 or 13, which is only for the normal invoicing provision. Debit note is a additional thing than the tax invoice. Thereby you can say the date of debit note would be the time of supply for the additional price which I get, so I can pay without any interest on the date of debit note. However, why I'm saying is because there is some history in the central excise where they said, in similar circumstances, they said no, you have to pay excise duty along with interest from the date of original clearances. That means they said original clearance would have happened 6 months back, so we have to pay interest for the 6 months also. So however, if you ask me, central excise provisions a little are different, little are different to some extent, because central excise provision very clearly says you have to pay excise duty on the uh, uh, transaction value at the time or before the uh, removal. So date of the remove time and date of the removal, they very clearly says section 4, but in that provision is not clear in the CST. There only says you have to raise the invoice before removal of the goods, and whatever the debit note I raise is the different from the tax invoice. And and one more thing is that debit note provisions are not there in central excise provisions. In all this background, the decision of the larger decision in case of Steel Authority of India can be distinguished and can be said that I need I need not pay interest on the intervention period. The whatever the payment I make GST on the date of debit note would be sufficient. Next slide. Yeah. Next slide. Yeah, same. Section. Yeah, here the issue here is, if you see section 12 and 13 says that time of supply will arise whatever the liable to pay tax. So basically, time of supply is that event where liable to pay tax arises. Now the point is, you see section 148, which is being very frequently being used by the government for postponing or giving a various relief for the procedures and all that, where they says the section 148 says government may, on recommendation of council or whatever that they says, they can give us special provisions to be procedures to be followed by such persons, including those with regarding to payment of tax. So if you see section 148 is only for the procedure to be followed, or they are going to specify different procedure for such circumstances. Now, in this background, the point what I would like to discuss with all of you is that, let's say if take an example of real estate 5% scheme, there one of the amendment what they bought is that, if I the in continuation to the yesterday discussion, we have already discussed that development rights we can still say that it is not a supply of services from the landlord. It can be said that it is in the nature of sale of land or building, sale of land, and falls under Schedule 3. So thereby, I am not deviating from the discussion. I'm only saying that let's assume that development rights is service and liable for GST. For assume for a moment, if you're going with that assumption, now I am discussing on the point that whether in the guise of the taxing the development rights, there is one issue which I would like to discuss. If you take an example of transitional example of joint development agreement was entered prior to 1st April 2019. That means before that scheme has come, and supplement agreement has entered after 1st April 2019. So why I'm saying this is that, see, if you look at reverse charge notification, it only says that services of transfer of development rights is liable under reverse charge in the hands of developer promoter. That means from 1st April 2019, whatever these GST liability on the development rights has to be paid by the developer under reverse charge. Now the point boils down, why I'm saying is that if you apply section 12 and 13, particularly section 13, which is for services, this says time of supply would be the receipt of the payment. By virtue of joint development agreement, the the builder has already received the payment in the form of development rights. Thereby, there is already a payment at the time of JDA itself. Thereby, the time of supply is already triggered in the at the time of JDA itself. However, there is a notification number 4 of 2018 where it says in case of this cases, this is time of supply liable to pay tax arises not at the time of JDA. This is at the time of supplementary allocation. That means allocation of the area or allocation of the flats or handing over of the possession. So instead of we getting into that dispute of to what extent we can construe that whether it is they are referring to handing over or whether they are referring to allocation of the area between the landlord and developer. I'll just confine to the assumption that notification number 4 of 2018 says that allocation of the area, that means which is done, let's say JDA development agreement, this is 40% is landlord, 60% is developer, and after the at the and subsequently they'll execute a supplement agreement. This says out of the 100 flats, 101 is yours, 102 is mine. Like this, they are going to bifurcate or allocate the flats between both of them. So this may many times this may not happen at the time of JDA. This may happen subsequent to the JDA. So in this background, if you strictly apply the notification number 4 of 2018, the time of supply is going to, or the not time of supply, liable to pay tax arises at the time of supplement agreement. So let's assume that the supplement agreement is after 1st April 2019, but JDA is prior to that. So if you apply notification number 4 of 2018, thereby the time when you are liable to pay tax, so after 1st April 2019. So landlord is liable to pay tax originally on this development rights because he is supplier of services. But if you see from 1st April 2019, this was brought it under reverse charge. Now the question is, who is liable to pay under reverse charge? Whether it is falling under reverse charge or not. To answer this, in my view, is that forget about section notification number 4 of 2018 for a moment. The liability or time of supply is already crystallized in section 13 itself. The moment the landlord enters JDA, there is a service happened, there is a supply happened, and you may have to pay GST at the time of JDA itself. However, only procedure for payment of tax is deferred to a subsequent event of supplement agreement. Thereby, landlord still liable for reverse GST, and it is not liable under reverse charge even for this case of transitional arrangement. So I think next slide. So this is another technical issue which is there in the time of supply provisions. If you see the time of supply provisions prior to 1st February 2019, I must say that they says time of supply provisions are linked to the rising of invoice. If you are given invoice within the prescribed time or whatever the time, that will be the invoice date. Or if you receive money before that date, that will be the time of supply. Of course, if it is for a goods, that receipt of payment is deferred for a moment now. So that some substance, the time of supply provisions are linked with the raising of invoice. But while doing so, they have given a reference of section 31(1) or section 31(2). That means section 31(1) talks about raising of tax invoice for the supply of goods. Section 31(2) talks about raising of invoice for the supply of services. Now, in this background, if you refer that subsection 1 and subsection 2, that only covers normal cases of raising of invoice for the supplier of goods or supplier of services. There are some other special circumstances like continuous supply of goods or continuous supply of services, which are not covered in subsection 1 or subsection 2. It is separately covered under subsection 4 and subsection 5 of this section 31. Thereby, if you strictly construe the section 12 and 13, so the for continuous supply of goods or continuous supply of services, I need not apply the time of supply in case with the invoice. I can simply link with the receipt of payment. Thereby, I can pay GST only on the time of payment, not at the time of due date for raising of invoice. I'm saying due date of raising invoice. If you already raised invoice, then that you can't escape that. But you are not raised invoice and that due date also is expired, you can still take a view that because of 31(4) and 31(5) was not referred in section 12 and 13. So you can say the receipt of payment will be the time of supply, and I can pay GST only at the time of receipt of money. So I can give a if you apply this analogy to the practical example. If you take many builders may not be raising invoices to their amounts issued from their customers. So they are not raising invoice. So and definitely their services are continuous supply services. So thereby you can, if you bring this interpretation into picture, you can say builders are not able to pay GST at the time of due date of milestone, which is as far as company continuous supply services. I can pay still GST on the time of receipt of money. However, this interpretation is going to can be there can be there only till 1st February 2019, because law was amended to remove that subsection 1 and subsection 2 references. They have given all the entire section 31 as a reference. Thereby, this interpretation is only up to 1st February 2019. Yeah, next, I think that's all. Yeah, I completed my presentation. I request Anil to give his comments on this few presentation of today. So then we can take up the questions.
Anil sir. Hello.
Good morning, all.
Yeah, good morning, sir.
Hello.
Yes, sir, you are audible now.
Okay. So Venkataprasad covered all the points elaborately. So since the time is we are short of the time, I will give only 2-3 points. After that, we can take up the questions. Over a period of time, this transportation by GTA and the transportation by other than GTA is crystal clear. So of late, the GST department is also realized that wherever the consignment note is not issued, as per the regulations, as per the trade practice, as per the business understanding, that the transportation is specifically exempted from GST, that we need not pay the GST on the transportation wherever there is no consignment note. This fact is clearly mentioned even in the flyers given by the GST department nation wing. So they have clearly told that this point, wherever there is no consignment note, that transaction is not liable for the tax. Another important point I wanted to highlight: whenever we receive a service from the foreign country, we should be very careful that whether service is received, if service is received, consumed in the foreign country, that service may not be liable for tax in India under the reverse charge. just because that expenditure is recorded in the consolidated books of accounts of India, consolidated books of accounts of the Indian company. So only the services provided and consumed in India is only liable for the GST. So to this extent, there are a couple of judgments under the old service tax law. This place of supply is application of the place of supply is only limited to the deciding whether it is interstate supply or intrastate supply. The principles given under the place of supply sections will not be applicable to decide whether service is provided in India or received in India. So it is crystal clear that this act will apply only for the transactions in the territorial limits of the India. So we must be very careful in determining the taxation on the cross-border transactions. Another point, wherever it is mandatory for the government to provide take some fees and provide the some sort of mandatory functions like register of companies. Register of companies, he as per the Companies Act, he will collect some fees for the recording of the appointment of auditor, appointment of the director, removal of the director, or maybe increasing the authorized share capital of the company. So for various purposes, the company has to file the form along with the fees. The register of the companies has to record the facts in the records of the registrar. So like this type of services, this type of fees, we can say that there is no service involved. It is only mandatory function. Therefore, no GST is required to be paid. Another important point I wanted to tell is considering the circumstances in which the exemption given under section 9(4), that reverse charge. If you purchase the goods or services from the unregistered person, you have to pay tax and reverse charge. The way that is developed, the way that is implemented, and how it is withdrawn, how that section itself is amended subsequently, considering the overall scenario, we can treat this exemption is a retrospective exemption. So even if the department wants to collect the tax under this section during the course of audit, there will be a great protest from the industry in future, I am expecting. So with this, I am concluding my comments. Now we will take up the questions.
Thank you, Anil sir, for your comments and value additions. Now we will move on to Q&A session. So Venkat sir, shall I start reading the questions?
Yeah.
Yes, sir. So the first query for today's session in relation to RCM is, sir, what if my supplier has wrongly charged me the tax under forward charge, but later I came to know it's covered under RCM? So what should a rational taxpayer should do? Whether he need to pay once more under RCM and take credit, or since he already paid tax to the supplier, he can let it go and the input tax credit of that can be claimed.
Yeah, you can pay, you need not pay again, and because it was already paid by the supplier under forward charge, not pay. Only, the safeguard what he can do is he need to ensure that it was return was filed by the supplier. So tomorrow somebody asks, he can show that, look at my GST 2A. There also the return was filed by the supplier, showing this as a tax invoice, and he was paid GST on that. It is only not only you reimbursing tax to the supplier, you also safeguard yourself in establishing that your supplier also has filed return and shown this as a supply for the and in his hands. So that as long as these are there, I think he need not pay again. And there are this kind of controversies was already there in service tax regime. In the service tax regime, there are various series of judgments where it says when the either of the person has paid under forward charge, then again demanding and reverse charge or vice versa is not correct. That can be still that can be still taken in GST as well.
Okay, sir. Sir, one more thing. So, for the purpose of securing ourselves and for this non-compliance, what I should collect from my supplier? Any mail declaration that whatever tax collected by him has been paid to government or such a things? Because presently in GST we cannot identify whatever tax has been collected from me by my supplier yes or not.
That's true.
So, as a rational person, what I need to do to take the stand
As of
that
now,
I do?
just the fact that my supplier has uploaded the tax invoice in portal and it is coming in GST 2A, I think it is a sufficient proof that it is treated by the turnover by my supplier. If there is any difference between the GSR 1 and GSR 3P, that is anyway department is going to deal with it.
Okay.
So that reflection of the 2A is sufficient safeguard.
Evidence
However,
for us to
if you sufficient evidence, if we even taken an undertaking or mail confirmation from supplier is also a good safeguard which can be adopted if possible.
Okay, sir. Moving on to next query, sir. Anil sir, anything to add, or shall we move on to next query?
Next question, Arjun.
Okay, sir. Okay, sir. Sir, this is in relation to GTA services. Sir, as we discussed that that issuance of consignment note is the major activity for taxing this GTA transaction. So, what is the legal requirement of consignment note, and which are all the documents that can be considered as a consignment note for the purpose of checking the exemption application?
See, generally consignment note will be given under this transportation regulations, where they say they have to give a consignment details. Generally, consignment note is basically gives in details of who is the consigner and what is the consignment, and who is the consignee, and what is the all these details will be given. If that is required to carry along with the vehicle, that is the legal requirement. So that if that is missing, we can say it is not a consignment note.
Okay. So apart from this, okay, sir, is there any liability for the transporter to mandatorily issue consignment note? Because if such exemption is there, why not the transporter start not issuing consignment note for all transactions? So what would be his legal requirement whether to issue consignment note or not?
I think there is some legal regulation which I am not able to recollect as of now. There is a legal regulation. There is some goods transporter act or something act is there, where they deals with the safeguards and regulation of the transporters, where they talks about transporter must give a consignment note if it is exceeding so and so distance or so and so vehicle.
Okay, sir.
I think Anil sir may give if he is aware, he can give some comments on it.
Sir. Anil sir.
Arjun, that consignment note is completely the requirement of the buyer. Suppose if I want to transport my consignment, let us say from Vizag to Bombay.
Okay, sir.
So I insist for the consignment from the transporter, because that consignment note is the proof for taking the goods from me, and the consignment note is the proof for me to take the delivery from the transporter in Mumbai. So either my customer or my factory, whatever it is. So in normal course of business, if the transporter generally will give the consignment note. Suppose if the transporter is exclusively engaged for one company, he always transport the goods of that company. So it is a fixed place. So where he has to take the goods from the port, he has to deliver the goods in the factory premises. If the places are fixed, transporter is fixed, transporter is known to the company for quite long period of time. So he is exclusively for that working only for that company. Sometimes the transportation within the port or within the factory, like big steel plant and all, it will be thousands of acres. Transportation will be within the factory premises, or there may be a transportation from the mine to factory. So the mine and factory owner is one and the same. So their own goods are transported from one place to another place. So if the relationship between the transporter and company is such a strong, so and working for a quite long time, the recipient may not insist for the consignment note. So that is the somewhat like unorganized business. So it is as per the trade practice. So the consignment note is not required to be issued. So in those cases, the liability will not attract. Suppose if I go and ask one new transporter, saying that you have to transport my goods to Bombay, if he says we don't want to give the consignment note, I will not hand over the goods to them, because he is a new person. If I hand over the goods to him, I don't know whether he will safely deliver the goods to my party in Bombay or not. We are not sure. So in that case, we don't deliver the goods to the transporter. So the requirement of issuing the consignment note or not issuing the consignment note is depending upon the relationship between the parties.
Okay, sir. Okay. Moving on to next query, sir. This is also in the context of goods transport agency only. So here, sir, the RCM notification says the RCM will not attract where the supplier is charging 12% to me. So what if my GTA is charging 5% under forward share? Whether still RCM will apply in that case?
RCM will not apply. I think, sorry, RCM still applies, because the notification says where supply has not opted for the 12% or has not charging 12%. So it's clear notification when making the liability under reverse charge, the wordings are very clear and saying that they says except where the GTA is paying a GST at 12%. He is not paying at 12%, that means he is liable under reverse charge. So if still transporter is charging at 5%, means we may have to go to first question of should I continue and should I pay again or not. That is going to come back. So to answer, it is still liable under reverse charge. Only when it is not liable under reverse charge is that when he is charging at a 12%.
Okay, sir. Okay, sir. Also, one more possible view can't we take like this? Like the levy is attracted only under 9.1 and 9.3 and 9.4 is just shifting the payment liability to the recipient. So once the supplier already charged the tax, that 9.3 or 9.4 may not be triggered if you have already paid to him. Can we take such kind of stance?
See, that levy is triggered in is only the this reverse charge or forwards is only the mechanism of collecting the tax.
Yes, sir.
So the rationale is still that as long as either of the person has paid GST or tax to the government, you can't ask for again tax on the same transaction, because it goes beyond this levy, because levy provides for on a supply made.
Okay.
And the supply is made and you have paid GST. If you ask again under reverse charge, that means on the same supply you are asking 2 times, which is not permitted.
2 times levy. Okay. So based on that stand, can we say once the supplier has charged 5%, already the levy collection, everything has been completed. Now you cannot levy one more time under RCM. Can we take stand like that?
Yeah, legally you can take that stand. In fact, that is one of the stand which we take when we are disputing the demands where either of the party has paid under forward charge or reverse charge.
When the supplier is directly charging 12% in his invoice, it is safer that we don't require to pay under RCM. But dispute will arise when he is paying under. So we need to take a stand based on the case and scenario and the parties involved in that, their risk appetite, all those things. We need to take a stand subsequently. This is, can we summarize, sir?
Yes.
Okay, sir. Sir, moving on to next query. Sir, can you summarize once more regarding that ocean freight based on Mohit Minerals? What would be the rational decision after such decision? As a taxpayer, what should I need to take a rational decision? Whether to
Yeah.
pay and take.
So yeah.
Yes, sir.
The point is, I think as long as if you are able to take ITC, though technically may not be rightly eligible for the ITC, you can still
Okay.
take a chance and take ITC because that is a better. That is that you are in a better position of than not at all paying GST.
Okay,
So
sir.
we don't know, tomorrow government may come and say that I'm making retrospective amendment. Don't know that. So instead of
Okay, sir.
getting into that, landing into the risk of not at all paying, it is always better to pay GST and take ITC. So as far
Okay.
as that handling that ITC denial, we can, as I was mentioning in my deliberations, as long as government has not disputed or not rejected the assessment on output side, they cannot
Okay.
they take a different stand or different position while denying while allowing the or denying the ITC. That means when
Okay.
government has accepted, department has accepted revenue under reverse charge, and though I am not being recipient, then they can't come and say you are not a recipient, I'm denying the ITC, because that here or there the underlying point is that you must be a recipient.
Okay.
I think my advice is to practically better to pay and take ITC if you're eligible for ITC instead of getting into the taking a chance of not at all paying GST. If you're not able to take ITC, I think you can take a chance because anyway for you doesn't accept interest cost doesn't make a much difference.
Moving on to next query. Sir, this is in relation to transactions of directors. As you already explained everything in the deliberation, this is, I think, he has asked one more time. Sir, I am a director and I am renting out the property in my personal capacity. Whether RCM applies to the company?
That's what, in fact, that's what I was highlighted
Already
that
answered.
yeah. So I think both ways are possible, Arjun. You can say
Okay.
either we
Yeah.
can say that not liable under RCM, you can say it is liable under.
Okay, sir. Sir, now moving on to next query. This is RCM in relation to the government services. Sir, as you have mentioned in your deliberation that when it is a sovereign function of the government, their sole power to collect fees and everything, RCM may not apply. They are asked the query, basic query is asking how to differentiate, how to take a stand, like which are the fees will be treated as a sovereign function of the government. For example, I am paying for ROC to my company. Can I take a stand that their RCM will not apply, or I am paying to municipal corporation as a permission to open a shop? So how to distinct and take a stand that these are all the sovereign functions, these are all kind of levy of tax or fees, so it will not be a supply. How to, what is the basis to identify and take a decision in such cases?
Yeah. So the point what you can say is that as long as there is a quid pro quo for you paying something to
Okay.
the government,
Okay.
it is a service from the government. The moment I say quid pro quo, you must understand the commercial quid pro quo. It is not that some statute says you pay legal fees and get money, get permission. There is no quid pro quo. It is only a permission I am getting because of statutory obligation.
Okay.
If you are able to show that there is something in return company has received by paying this amount,
Okay.
you can say that it is service. Otherwise, if in the absence of quid pro quo from the government, you can say it is not a service. And here again, statutory obligations or statutory requirements will not always lead to a quid pro quo to the company.
Okay. Sir, one more thing. In that business definition, in the last limp, they have also added the activities and transactions of the government as a public authorities. So what would be the intention of that? Just to add a ground to this kind of RCM levy, are they included such transaction in business definition? Or
Yeah,
even though there is a
done away.
definition is included, we can take a stand like this?
Sorry. Last part I should
The
repeat,
last part
Arjun.
is the last part. Since there is a inclusion in the definition of business government, So can the department take what you can say an additional ground stating that it is already covered as business so that I can levy RCM? So even though such clause is included in the definition, can I take the present stand that not to pay RCM for such fees and taxes?
Yeah, see, the point is they are only deeming the in the case of public authority or public functions, they are not
Okay.
doing away with the statutory obligations or statutory functions. That is
Okay.
what the first thing what we have to remember. Second is
Okay.
that just because it is just because government has deemed that this is in the nature of course or business, there are other ingredients which we have to look at. We have to look at a reciprocal obligation, and we should look at a consideration. We should also look at what I got in return from the government. See, in the course of furtherance of business is only one argument which you have to uh, argument which you can take that it is not a service. There are other ingredients
Okay.
which has to be satisfied, like consideration, uh, something in return, quid pro quo, etc., etc. Reciprocal obligation.
Okay. Okay, sir. So moving on to next query. This is in relation to GTA services. Sir, there is a specific exemption when the GTA is providing transportation of milk. When I'm transporting milk, there is a specific exemption. What if I am also transporting some other milk products which are taxable along with the milk in the same consignment? How to bifurcate the RCM liability? And he's charging the single invoice.
Yeah, in that case, I think we have to look at in the single price you are doing. In fact, you are transporting, you are doing a single transaction, and in fact, that composite and supply also may not apply. So, in my view, if you are able to
Correct.
prove that my main intention is to transport the milk, incidentally, I am transporting other consignments. You can take a stand that what I am doing is milk transportation.
Okay, sir. To avoid dispute and litigation, it is better to get two separate invoice for this milk and milk product, so that one part we will clearly get exemption, another part whatever RCM is there we will pay and take credit to avoid future
That
disputes.
anyway they can
This
do.
can.
That anyway they can do.
Mhm.
Yeah, they can. That can be done.
Anil sir, anything to add?
Nothing, Arjun. Only that the government services where the private party is also entitled to provide the same services, so we can make that distinction. The government is only providing the services. The government is only entitled to do that certification or some registration, attestation.
Okay. Okay, sir. Uh, Venkat sir, moving on to next query. Sir,
Yeah.
is the impact of transaction between SEZ to DTA? Like for DTA, is there any RCM or RCM has to be considered, or it is a normal supply? SEZ to DTA.
Yes, is giving a supplies to the DTA.
Supply of service to the DTA, yeah. Supply of service to DTA.
Yeah, that is not a RCM transaction. In fact, the SEZ, there is exemption given for that transactions where supplies made by SEZ to DTA.
Okay.
That is not RCM.
So, yeah. So SEZ will normally charge GST to the DTA unit, and they will take credit, and the transaction will be treated as a general supply, normal supply.
Correct. Correct.
Okay, sir. Sir, moving on to next query. Sir, this is a transaction between parent company and subsidiary company in India. Parent company is outside India and subsidiary company is within India. We are paying a brand royalty to them for their name. Whether RCM applies in this case?
You are paying brand royalty to the parent company.
Parent company outside India, yeah.
Yeah, if it is because it is IPR services, it may be liable. But there is there is one interpretation in service tax regime which may be applied for GST also. They says if IPR is not recognized in India, under the Indian laws, it is not a service rendered in India. However, that may not fully applicable for GST. I think better to pay GST and reverse tax on the IPR services.
Okay, sir. The next query, sir. Sir, as we said that the intermediary service provided by the foreign entity may not be covered within the import of service because under section 13(8) of IGST Act, the place of supply is outside India. So here the query raised by the participant is the marketing services provided by the foreign company just to solicit the customers. So he will provide solicitation service to get the customers within India. Can we treat this as an intermediary services provided by the foreign company?
Come again. The marketing service company, what they do?
They will just solicit the customers. They will get the customers to Indian company. Later, the Indian company will take care of entire proceedings. So for whenever the customers are identified from such countries where the intermediary is there, we will be giving some commissions to them. So can this be treated as an intermediary
The
service?
marketing company is outside India.
Yeah, outside India. Yeah. So can we say that outside Indian companies providing intermediary services in this transaction?
Yeah, if you go by this intermediate definition, it says if you are an agent and giving services relating to the procurement of goods or facilitating or arranging the goods or services between two persons, you are an intermediary. However, that definition is very vague. In what cases he is acting as the agent? In what cases he is doing a marketing? It is practically difficult to bifurcate. If you are able to show that he is not he is acting as agency character, that means he is acting as agencies to you, and his acts are binding on you, then he may be intermediary. Otherwise, he may not be intermediary. So thereby, that consequence of paying or not paying GST would differ. That market company, if he is acting as independent capacity and they are not acting in the agency capacity, I think then he is not intermediary.
Okay, sir. Sir, the next query, sir, can you comment once more? He couldn't get that during the deliberation, I think so. He said, can you once again comment on development rate entered before 1/4/2019?
Yeah. So what I'm saying is that development rights. Let's say joint development agreement is entered on December 2018, 1st December 2018, and the in joint development agreement we have agreed that developer is taking 60%, landowner is taking 40%. So in between 1st April 2019, there was a government has announced a scheme saying that 5% of GST has to be and all that is there. That may not be relevant now. So now what happened? We have entered as allocation agreement on 1st May 2019, where we agreed that out of 100 flats, this 101 is landowner, 102 is a developer, 103 like this. There is a allocation of the flats, and for this we have entered a supplementary agreement, which is on the 1st May 2019. So this is the facts. Now apply the law. Go to law. Law says if you simply go by the now the point is what is the time of supply? 1 second, Arjun.
Yes, sir.
Yeah. If you go by the GST provisions, the first point is that is it a service or is there any service or not? Yesterday already we discussed it is not a service. Can be said that it is not a service and not pay GST. So that is going to be there anyway. So, but government is by their actions or inactions, they are trying to say that it is service and you have to pay GST on it. So let's proceed with an assumption that it is service and liable for GST. Then the point is when should I pay GST? That means what is the time of supply? So for this, if you see the time of supply provisions section 13, it says receipt of payment. That means the arrangement that I'm going to get the built up area from the developer, it happened by virtue of JDA. Thereby receipt of service has happened at the time of JDA. The time of supply is happened. So thereby, technically, if you apply section 13 to the facts of the case, JDA itself is the time of supply, and you may have to pay GST on the development rights at the time of JDA. However, notification number 4 of 2018 was issued saying that in case of supply of development rights services, it says the time liable to pay tax arises on the date of allocation of the area Of course, there is another way of looking at is handing over. That's the reason I'm not getting into that. Let's assume that notification 4 of 2018 says allocation of the area is the time of supply. So, or is the event that make liable. So, if you see, if I simply go by section 13, I have to pay GST on JDA date, and because this is prior to 1st April 2019, landowner will be paying under forward charge, and he is a supplier. If you apply notification number 4 of 2018, the liable to pay tax arises when these are arising on
allocation
supplementary agreement. That means 1st April, 1st May 2019. So if you look at the provisions of as on 1st April, 1st May 2019, the development services are under reverse charge. Now the point is whether this reverse charge liability which is created from 1st April 2019 will be applicable for the transaction which are already entered prior to 1st April 2019. Time of supply as per section 13 occurred prior to 1st April 2019, but only by virtue of notification given under section 148, which is not to defer the time of supply. It is only procedure to special procedure for payment of tax. That means it is giving a special procedure. They are not giving a mechanism. They are only giving procedure. So by virtue of special procedure given under section 148, then somebody says that they are deferring the time of supply. They are not deferring the time of supply. What they are deferring is only the event of payment. That means you are still liable on section 13. Only to give us some special leeway, they have deferred the payment. That means developer is the landowner is still liable to be the liable for the GST on the development rights, and the reverse charge notification which has come from 1st April 2019 is not applicable for this spillover transaction, and developer is not liable under reverse charge. That is the point which I am trying to highlight. Hope I am clear to the queryist.
Yes, sir. Yes, sir. Moving on to next query, sir. Sir, in case of RCM, the time of supply is providing that within 60 days from the date of invoice or date of payment, we need to, whichever is earlier, we need to make the payment of tax. So what if the invoice was issued and I have made the payment on 61st day? So here, as per that provision says, whichever is earlier. So now the liability arises from the date of invoice or from the 61st date of 61st date after the issuance of invoice.
He has given invoice after 61st day.
No, he get given invoice already. So I have 60 days. I have 60 days time to make RCM payment.
Correct.
So here I have not made payment to supplier also, and I have not made payment of tax also presently. So on 61st day, paying the tax to government after issuance of invoice. So here the interest will apply from the date of invoice, or interest will apply only from the 60th day of after issuance of invoice? Is the question.
It is only from 61st day.
It is only from 61st day.
Yeah.
Okay. Because the time of supply arises on the 61st day. So
exactly.
If you are having any delay after the 61st day, you need to pay interest only triggering from 61st day. This is what the summary.
Correct.
Yes, sir. Okay, sir. Moving on to next query, sir. This is again a time of supply issue. So I am issuing a voucher which are identifiable at the time of issuance. So I am paying the tax at the time of issuance of voucher. In this context, the three questions has been raised. What if the voucher has been expired and the supply of goods has not been made? Can I claim refund of tax? Second question is, if the tax, if there is a supply of goods happening, but in the intermediate period, there is a change in rate of tax. So in this case, what should be the impact? What will be the impact? Then the third question is whether invoice has to be issued at the time of issuance of voucher, or invoice has to be issued only at the time of redemption of voucher by supplying goods. These are all the questions.
Okay. So in my view, I think as long as you are giving a vouchers for identifiable supply under section 12 or section 13 itself, they says once there is a supply is identifiable at the time of issue of vouchers itself, we have to pay GST. So that is fine. The point is that the first part of the question is that he has not actually used the vouchers, or he has not actually separated the goods or services. In this background, we can say because there is no underlying supply has not happened, and the supply what I have supplied is only vouchers, and he has not claimed that benefit. We can take a shelter of that actionable claim of Sodexo vouchers case, but to what extent they are going to accept is different. Is maybe we have to look at. You can try, I say.
Okay, sir.
Sir, and as far as second part of the question,
yeah, yes, sir.
Yeah, I think second part of the question is what
that means
then what happened?
Yes, sir.
Yeah, go on, Arjun.
The second part of the question is, at the time of issuance of voucher, the tax rate of the goods was 18%, but when he comes for redemption, there was during the intermediate period, the rate has been increased to 28% by the government through notification.
Then they can apply that section 14, where the
sir.
payment and invoice as well as the actual services or goods that can be applied. So two of three are falling before the change, he can take old rate. If it is falling after the change, 2 out of 3 are falling after the change, you can adopt new rate. And as far as the issue of invoice is concerned, I think invoice provisions also are covered this vouchers related, no, Arjun?
Yes, sir.
Yeah, I think that may be followed.
Okay, sir. Sir, moving on to next query. Sir, this is relating to input tax credit of RCM. Sir, can I claim it in the same month of the payment, or I need to avail in the next month, just like service tax?
Yeah, you can avail in the same month. So you not wait for next month. Though the payment you are making in next month, you can avail in the same month. Let's say May month RCM, we can avail in the May month rate itself.
Okay, sir.
Sorry?
So there is no specific restriction in GST, just like S12 regime in service tax, where they have specific
Exactly.
Okay, sir. Yes, sir. Sir, this is in relation to RCM liability of unregistered persons. Sir, even though they have given exemption for payment of tax, that regarding this documentation purpose, like issuance of payment voucher, all those documentation purpose, whether it is still mandatory to maintain, or even for that we can claim the exemption.
Yeah, that it is not liable for liability. You not give a payment voucher or refund voucher. You not give it.
Payment. So when I am making payment to such unregistered supplier, I don't need to raise payment voucher, and I need to document it. That is not mandatory.
Yeah, that is not mandatory, but it is advisable to do so.
Okay. Okay. As a conservative compliance, and it is better to issue payment voucher and maintain it.
Yeah.
What I'm raising. Yes, sir. Okay, sir. Sir, the next question. A small contractor has collected an advance of rupees 10 lakhs from an education institution. Education institution. Now, because of COVID issues, he could not take up the job.
Okay.
So he has already paid the tax in the month of at the time of collection of advance. Now he is going to cancel the contract. What can be done? Whether I raise credit note and cancel it, or I need to go for refund? What would be the suggestion?
I think he can give credit note and adjust in the next other liability. If he don't have any liability, he can go for refund, because it was not. Did he give any invoice first of all?
Yeah, at the time of receiving advance, he would have given receipt voucher. He might not be given the invoice because he has not completed the work.
If he has not given invoice, he can't. There is no point of giving question of giving credit note at this stage.
Yes, sir.
You can, if you go by sections 54 as well as the other provisions, the right procedure would be to apply for a refund. However, there is a circular number 37 where they says they can adjust for the other liabilities also.
Okay, sir. Okay.
And in fact, there is a recent circular given for the COVID scenario also. They said If you are able to adjust, you can adjust. Otherwise, you can come for a refund.
Okay.
There is a latest circular on this point.
Okay, sir. Sir, the last query for the session, today's session. Sir, I am a supplier of exempted goods. My 100% transactions are exempted under GST. If I am availing GTA services or advocate services, something which are covered under that RCM, am I liable to take registration and pay RCM? Or still being I am providing 100% exempted services, can I claim the exemption
I
for
got
RCM?
your question, Arjun. I think I'll answer. Whether
Okay,
this compulsory registration under section 24, where one of the clauses is that once you are liable under RCM, you are you have to go for a compulsory registration. If you see that the shelter of giving exemption for registration is for this case is under section 23, where they say it's completely exempted supply. Thereby, if section 24 is not overriding in section 23, it only overrides section 22. So in my view, if you are into complete exempted supplies, and just because you receive some services or goods which are under reverse charge, you need not come for a compulsory registration. Compulsory registration is only for a cases falling under section 22, not under section 23. And in fact, there is another amendment made in section 23 where there says, and there were notifications given under section 23 where there says, which supports this view.
Okay. Okay, sir. Sir, I hope we have addressed all the queries for today's session. Okay. One last query asked by participant just now. Sir, can you sum up once more regarding the time of supply relating to debit note? What should be the contention? It is the query.
Yeah, as far as debit note, going by the overall provisions of GST, you can say that rising of date of debit note would be the time of supply. I can pay GST from the date of debit note. I need not go back and pay interest from the original invoice till the debit note.
Okay, sir. Okay, sir. We have answered all the queries for today's session. I thank both the speakers and expert Venkat sir and Anil sir for your wonderful deliberation on the topic and also allocating your time for this session in between your busy schedule. Thank you, sir. Thank you for your deliberation of the topic and
I
valuation.
also thank each participant for their active participation and giving, they're sparing their time here and raising their questions. Thanks to each one of you.
Thank you, sir. So now we will go for a short break. We will return at 12 p.m. With the next session on unresolved and resolved issues on classifications taken up by CA VASANTH sir. Now we can go for a short break. We will return by 12 o'clock. Thank you. Welcome to all participants. Now we can resume to our second part of the session. Sir, Vasanth sir, the PPT is not yet shared, not visible now presently. The shared PPT. So now we can go for the introduction of the today's second session and the speakers and experts. In second session of second day of our advanced certification course, we are going to deal with resolved and unresolved issues in classification, along with 10 major dilemmas and analysis of landmark decisions under GST, including S12 regime. To take up this session on the topic, we have an eminent speaker, CA Vasanth K. Bhatt, who will be deliberating on the topic which has been allocated. About the speaker, CA Vasanth K. Bhatt, BCom FCA, is a chartered accountant having more than 18 years standing in the profession. He conducted many workshops on various matters relating to central excise, service tax, MVAT, and GST. He was co-opted member of IDTC of ICAI during the year 2012. He co-authored the background material of certification course of indirect taxes, e-book on point of taxation, published by ICAI, and WARC reference manual for the published by WARC of ICAI. He is co-compiler of background material of model GST law published by ICAI for the training of government officers. He is a faculty on central excise, service tax, and GST. With this brief introduction, I would warmly welcome the speaker for the session, CA Vasanth K. Bhatt sir. Sir, welcome for the session. Kindly take up the session forward. Sir, Vasanth sir, you have been muted. Can you unmute and speak?
Am I audible now?
Yeah, you are audible now, sir.
Okay, my PPT is visible?
Presently not, sir. Shall I make you once more present? Just a minute, I will give you one notification. Yes, sir. You would have received now. Yeah, it is visible. Yeah.
Okay.
Yes, sir. Now we can proceed.
1 second. I will. Yeah. Very good afternoon. Thank you, Arjun, for your support, and I welcome everybody for the second session of the day. The topic is classification and issues thereon. See, what is classification? Why it is in GST important? General classification is segregation of goods and services according to their nature and characteristic, and into the subheading and service code. Heading and subheadings and service code are the broad class of to which the goods or services belongs to. So the 1 second, some technical issue. Yeah.
Yes, sir. Any issue?
Yeah. Now it's clear. So why this classification is required? The classification is very important to determine what is the tax payable on particular supply, whether it is supply of goods or supply of services. What are the various exemptions available to particular supply, whether that particular supply is covered under RCM or not, and in case of services, even to determine whether it is only to export of service or not. The classification plays very important role. Certain certain, in case of place of supply, for determination of the correct place of supply, the category of supply or classification of supply is very important. At the same time, to see whether the benefits are eligible for particular export, this classification plays an important role. So correct classification is very, very important, and one of the basic aspects in compliance under GST. It was also the similar importance was there excise regime and service tax regime also. In the GST, earlier we thought the rates would be common for all, both for goods and services. There will be minimum slab, 1 or 2 slabs, so that the classification may lose its importance. That's what originally it was thought about. But subsequently, when we saw there are different minimum 5-6 slabs of rates, and all the importance of classification which was there earlier continue to be there in GST also. So it has become very important, because a lot of litigation used to be there under the erstwhile tax regime based on classification. So hopefully those classification disputes or the ratios derived from those judicial prudence may be useful in classification in GST also, because the concept of classification remains same, though the taxable event is different, but the classification of goods and services, the earlier decisions of the court and methods followed will be useful in understanding the correct classification in GST as well.
Sir, one suggestion from participants. Sir, the audio quality has been due to the connectivity issue. There is a break in audio. So what we can do, we can switch off the video, and we will get a good quality of internet, so that we can continue with the audio perfectly.
Okay. Am I audible now clearly?
Yes, sir. Yeah. Now it's
okay. So just I will give you the brief history of classification and how the earlier tax regime, the Tariff Act were enacted, and the basis on which this classification was done. See, Article 246A of the Constitution empowers the Parliament and the states to levy GST. That's a basic section, as a basic article under which GST Act were enacted in the Parliament as well as by the state legislature. Article 279A empowers the GST Council to recommend, among other things, rates, including the floor rates, bands of goods and service tax. So 279A gives various powers for the GST Council to recommend the aspects mentioned therein to the government, upon which the government can make the changes in the act as well as the rules thereon. On its own, either the central government or the state governments cannot make any changes in the GST. Only upon the recommendation of the GST Council, any changes can be made. This is the structure in which GST has been enacted. And earlier, Article 246, the central government was allowed to make the laws pertaining to the items specified in list 1, and state government was allowed to make the law with regard to the items specified in list 2. And there was one more concurrent list, that is list 3, wherein both central government as well as the state government both were allowed to make the rules. Accordingly, the earlier tax laws like Central Excise Act or Service Tax Law or even VAT, all those acts were made under this power given by the Parliament. The Central Excise Act 1944 was governing the duty of Central Excise, that was tax on manufacture, and the Tariff Act was there, which described the various goods, its tariff rate as well as tariff entry, then the measure, the unit in which it should be measured, And then it also empowered for the government to make various changes. Similarly, Customs Act 1962, which is also continued to be there even now, it is for applicable on the imported goods. And under again, Custom Tariff Act is there, which gives the classification of the goods imported. That is referred why for us now to understand the provisions of Custom Tariff Act is GST classification notifications refer to the certain provisions of Custom Tariff Act. That's why it is important to understand how this Custom Tariff Act is providing for various levy, and also what are the powers given under the Customs Tariff Act. See, it also provides for levy of additional duty and import duty, and the Custom Tariff Act empowers the central government to increase or decrease the rates by notification. So all the powers of the government with regard to changing the rate with regard to imported goods was given by the Custom Tariff Act. So under the without as you are aware, without the authority of law, tax cannot be levied or collected by the government. So here it was the Custom Tariff Act which was responsible, or which was the basic authority which empowers the government for prescribing the rate on the goods imported. Whereas it is a very important case, Govind Saran Ganga Saran versus CST 1985, Supreme Court has specified the basic concepts in case of any tax. So there are, we can say there are 4 pillars required for any tax to be levied on any particular transaction. What are those basic components? One is the taxable event, the event upon which tax should be levied. And second one is the person. Who is the person liable to pay that tax? Then the rate of tax and taxable value. It is also said therein, if those components are not clearly and definitely ascertainable, it is difficult to say that levy exists in point of law. Any uncertainty or vagueness in the legislative scheme defining any of those components of the levy, it will be fatal to its validity. So for any levy to be valid or imposing any tax on any particular transaction, there has to be 4 components. What are those components? The taxable event, person who is liable to pay tax, and rate of tax and taxable value. In the absence of any one, tax cannot be valid. It cannot sustain. So here, if you look at these principles in terms of GST, we have what is taxable event, that is supply, specified in CGST Act Section 7, and also person who is liable to pay the tax. Section 9 specifies the supplier is liable to pay, as well as in certain cases, specified cases, recipient is also liable to pay the tax. So the person who is liable to pay the tax is also defined in the Act. Whereas the rate of tax, there is no provisions in the CGST Act which prescribes the rate, which specifies the rate for each taxable event or particular supply. So this is absent in the Act. And taxable value, Section 15 defines the taxable value read with the valuation rule. So 3 components of the basic pillar of any taxation are provided in the GST Act, whereas 1 pillar is missing, that is rate of tax. Of course, how this rate of tax is being prescribed in the GST is by way of notification. There are 2 rate notifications in CGST Act. One is for goods and 11 for 2017. Of course, the notifications are subsequently to be laid before the Parliament, and the consent of the Parliament is obtained. It becomes subordinate law. But whether the rate, which is one of the pillars, 4 pillars of any taxation, can be added in the taxation law by way of notification, whether the authority has been delegated by Parliament to the government or the department. This is the question, because in many cases it was held by Supreme Court. Few cases I'm mentioning here. One is Municipal Corporation versus Birla Cotton Spinning and Weaving Mills. Essential legislative function cannot be delegated by legislature. That means it is the duty of the parliament to prescribe the rate or enact the provisions which prescribe the rate and describe the goods or services. It was mandatory. It was not delegated by the parliament to any state government or the central government or the department, nor it can be delegated. This function should be performed by the parliament itself. It should have been like, say, if you look at the earlier tax regime as well as customs, the Customs Tariff Act is there and Central Excise Tariff Act was there. So these are the acts passed by the parliament. Also under the said act, the power was given to the government or the CBIC, that is the department, to change the rate as per the requirement. But in GST, it is absent. In the absence of this legal authority by the parliament, whether the rate notification issued under GST, CGST Act, whether it is valid or whether it is ultra vires. Recently, Mohit Minerals case, the Gujarat High Court, this case was pertaining to the GST under RCM on ocean freight, whether it is payable by the importer, because the under RCM under section 9(3) or 5(3) under GST Act, only the recipient can be said to be the person liable to pay the tax, whereas the notification 10 of IGST, it was the liability was fastened on the importer. In that case, the court held it cannot be, it cannot the delegated the notification cannot exceed the delegated power. And also in the said notification or said order, it was held the rate notification 8/2017 IGST, it is ultra vires the IGST Act, as it's lack legislative competence, because the parliament has not delegated this authority to prescribe the rate to the government. Thereby the rate prescribed by the government is not valid. This is what the Gujarat High Court has said. Now probably Supreme Court will have to intervene and find a via media how this can be ratified or set right. Otherwise this entire taxation of GST or rate notification issued both under IGST, CGST or by the SGST Act, it becomes invalid because there is no power. This is what it was said in the Gujarat High Court. If you look at the notification number 1 of CGST Act 2017, and it says tariff item, subheading, heading and chapter shall mean respectively the same in third schedule to Custom Tariff Act. That means the tariff item, subheading, heading is referred to the Customs Tariff Act. Whatever is described therein, same should be applicable to this particular notification also. That is the classification in GST also. And also further it is said rules of interpretation of the first schedule of the Custom Tariff Act, including chapter notes and section notes, and general explanatory notes shall be applicable to this rate notification. So to understand what does it mean, we need to see the Custom Tariff Act. So whatever is specified in this the tariff item, etc., we need to refer to Custom Tariff Act. If you and in the rate notification, if you look at the title, serial number is there, then chapter, heading, subheading, heading, subheading and tariff item is mentioned, and the description of goods is mentioned. Here if you compare to Custom Tariff Act, 4-digit code is always the description of the heading, 6-digit code is subheading, and 8-digit code is the tariff item. So here as of now we are using only 4-digit in case the turnover exceeds 5 crore, 1.5 to 5 crore it is 2-digit, and below 1.5 crore turnover there is no need to prescribe the classification code. So wherever we talk about heading, we need to understand the 4-digit code describing the heading. That means it's a broad description of the goods where various other goods or other goods falling under the same class will fall into. Subheading is the further fine definition wherein it gives the general name of the goods, whereas 8-digit code is the exact description of the item. That's also called as tariff item. So in rate notification 1, in most cases only 4-digit is mentioned. That means only broad heading is mentioned. In some cases 6-digit and 8-digit is also mentioned. 8-digit is the most specific description of the goods, the exact we can say exact name of the goods, we can say. Then in the rate notification, one more thing which is missing is the unit of measure. In the Customs Tariff Act as well as Central Excise Tariff Act, unit of measure, particular goods, whether it should be measured in terms of kg, liter, meter, various measures were prescribed. And though it is not practically followed, in many cases it was very useful for comparison purpose. For example, now when the raw material is sent for job work, after the processing it has to come back. While going, it may be in kgs or in meters or in any other measure or any other unit. While coming back, it could be in terms of numbers or in any other measure. In such cases, what happens is there will be confusion whether all the goods which were sent for job work have come back or not. That question may come. So different people may follow different methods. In that case, it becomes very difficult for comparison purpose, or to clarity may not be there. So it is advisable to have the proper unit of measure for each class of goods or each tariff item, which was as it was there under earlier taxation. Rules of interpretation. As we have seen, the rate notification refers to rules of interpretation of the Customs Tariff Act. How it is useful in classification of the goods. In case of Cellora International Limited, Supreme Court has said the tariff entries along with the relevant section and chapter notes have to be resorted to first to see whether the clear picture emerges. Only in the absence of such picture emerging, interpretative rules can be resorted to. So for classification, immediately we need not go to the interpretation rules. We have to see whether the description of the goods properly matches with the tariff item or description given in the tariff item, then chapter notes or head notes. If it is matching therein, then we need not resort to rules of interpretation. Otherwise, we need to go to rules of interpretation. What does that rules of interpretation says? As a title of sections, chapter are provided for ease of reference only. They have no legal bar in classification. Whatever titles or sections, say for example, it says in case of chapter 29, chapter 29, it may say inorganic products. Moment it is said, it doesn't mean that all the inorganic compounds will be falling under that particular chapter only. So based on the title of the sections or chapters, we cannot do the classification. We have to see further. It gives only a broad meaning. Then incomplete unfinished goods. Incomplete goods or unfinished goods should be classified along with the finished goods, which gives the essential character. For example, a car without a seat could be classified as car only because it gives the essential character of a car. Then mixture of substance should be classified as the classification of the substance itself. For example, concrete mixture, though it is it contains so many other items along with cement, the cement gives the essential character, so it should be classified as article of cements only. Then specific description should be referred to general description, and heading appearing in the last in the numerical order should be preferred, where a particular goods can be classified into two different tariff headings of equal importance. In such cases, whichever appears in the last is to be preferred, and always a specific description should be preferred to general description. Then rule 4 says most akin, it should be classified where the exact description is not available, then it should be classified along with the goods which is most akin to that. For example, in case of photography film waste, it should be classified as a polyester film waste under chapter 3915. Then in certain cases, the packing material should be classified along with the finished goods. For example, camera case or spectacle case or the cartons for toothpaste, etc. They will not have a separate classification by itself because it cannot be used along with any other things. It should be classified as the packing goods for which this packing is being used. However, if the packing material or the container is of a permanent nature or a returnable basis, for example, cylinder for gas or bottles which are supplied on a returnable basis, they will have a separate existence or classification for themselves. It need not be classified along with gas or the substance which is filled in the glass bottle, etc. So subject to this other packing material where they cannot have separate existence, then that need to be classified along with that particular goods only. And the last one says the classification will have to be made based on the terms and notes of subheading, and subheading should be classified with the other subheading only. So same level the comparison has to be done. This is what the rule 6 says. These are the various rules of interpretation which we discussed briefly, which will help the classification of the goods in case the description is not properly or there is ambiguity in the description of the goods. Then there is HSN explanatory note. See, HSN means a harmonized system of nomenclature, which was based on the convention of Customs Cooperative Council Brussels, and it was internationally accepted basis of a classification. This is our Customs Tariff Act as well as Central Excise Tariff Act was also based on the HSN explanatory note only. Here it gives more detailed explanation with regard to heading and tariff item. Whereas if you look at the chapter note, it gives the description about the heading and also that particular chapter, what all it covers, what it does not covers, and any specification or the criteria for classifying or not classifying under that particular chapter, that is prescribed in the chapter note. Whereas in case of explanatory note, it gives the even more detailed explanation or meaning of that particular tariff item. So it helps in a great way in classification of the goods. But the legal enforceability, if you look at, because it is not part of the either Customs Tariff Act or Central Excise Tariff Act, it's only the internationally accepted the classification guide, we can say. So in case of woodcraft products, Supreme Court said it is significant as expressly stated in the Statement of Objects and Reasons that the Central Excise tariffs are based on HSN and internationally accepted nomenclature was taken into account to reduce the disputes on account of tariff classification. Accordingly, for resolving any dispute relating to classification, a safe guide is internationally accepted. Internationally accepted nomenclature emerging from HSN. This is being expressly acknowledged basis of structure of Central Excise Tariff in the Act and the tariff classification made therein. In case of any doubt, the HSN is a safe guide for ascertaining the true meaning of any expression used in that Act. For example, in case of say reagents, the term reagent has not been defined in the Customs Tariff Act. So if you refer to HSN note, it gives the explanation. Reagent could be laboratory reagent which is used, or laboratory reagents or diagnostic reagent which is used in the diagnosis of the disease or human body conditions or animal body conditions. And also it says the analytical reagents means it is the reagents used in analysis of the goods or things other than a human or animal. Like that, the detailed meaning of particular item is prescribed in the explanatory note. So whereas such explanations would not be available either in chapter note or heading note, head note in the tariff act. So where there is a difficulty in classification, or the goods cannot be classified based on the tariff description of the tariff item, or even based on the interpretation rules, then a reference may be made to the explanatory note to understand that particular chapter covers what all the goods, or what is the meaning of that particular goods. So a reference shall be made to HSN, and based on HSN, when classification is being made, then it will also be accepted by the authorities as well as by the court based on the precedents. Then let us see the classification of service in GST. Rate notification 11 gives the classification of the goods. Here, if you look at the title of the notification, it says it gives the serial number, chapter, section or heading, then description of the service, rate %, then conditions. See here, the important thing to understand is whether the rate notification can prescribe a condition. See, condition, based on condition, if you look at the rate notification, there are certain supplies which attracts a lesser rate, and in certain cases you need to comply those conditions, and compliance of conditions are mandatory for arriving at that rate. Does that mean if you don't comply, higher rate is applicable? For example, in case of catering service or restaurant service, 5% without ITC. In all other cases, normally the rate prescribed for service is 18%. Then do you have the option to pay 18% and avail ITC? Here it is in the said notification itself, it is mentioned there is no, it is mandatory to follow. If you look at section 11, it says where the exemption is unconditional, where there is an absolute unconditional exemption, then it is mandatory for the taxpayer to follow that. He cannot have the option whether to avail the exemption, or he has the option to tax the or charge the tax. He has to mandatorily avail the exemption. There is no opportunity or option for him. Whereas in case of conditional exemption, he has the option. He may comply the conditions and go for the exemption, or he may opt for not complying the exemption and not going for the exemption. Whereas in this rate notification, conditions are also there, and at the same time it is mandatory. You have to follow. You don't have any other option. This is the it appears this is against the principle of law. There cannot be anything contrary to what is specified in the act, in the notification. And also, if you look at the history of classification, there cannot be any conditions attached to rate. Conditions can be attached to only exemption and also for the valuation, but for rate there cannot be any conditions. Of course, this rate notifications have been, or authority for issuing the rate notifications have been derived from section 9, that is levy, section 11, that is exemption, section 15, that is valuation, as well as section 60, that is with regard to ITC. From all these basic provisions, powers are drawn and this notification has been issued. So it is, you can say it is the rate notification, it is the exemption notification, it is the valuation notification, it is the notification pertaining to ITC also. So it is a various combination. Probably this may not be the right way of doing the things, but having it is issued by the department and which is being now followed, well, probably Supreme Court will have to come and say whether it is correct or not. But on the same basis, as I mentioned earlier, the Gujarat High Court said the rate notification under IGST is ultra vires the IGST Act. Again, in this rate notification for service, a reference to chapter, section or heading, wherever they occur, unless the context otherwise requires, shall mean respectively chapter, section, and heading in the annexed scheme of classification of service into bracket annexure. But there is no such annexure in the scheme of classification for this notification. Subsequently, if you look at the CBIC has issued one explanatory note for the scheme of classification. It is not part of this notification because it is not issued by way of notification also. Of course, that scheme of classification issued by CBIC in their website is a very detailed description of various services that is based on the UNCPC, the Central Product Classification of the United Nations. Based on that description, this explanatory note to scheme of classification of service has been published by CBIC, and it gives a very detailed classification of various service. It becomes a very good tool in case of classification of services. So earlier the difficulties in service tax faced in classification, whether it is fitting into the exact definition of various service prior to 2012, whether it was properly matching with the definition given in the act or not, those issues are we can say it is minimal in GST because of this aid. Since it is issued by CBIC itself, we can say it has got some binding force on the classification. Otherwise, it doesn't have any legal backup. But it is giving the very detailed, very clear classification or tool for classification, describing various services included in particular entry, which will be very useful in classification of the services. Further, in this rate notification, it also talks about the rules for interpretation in the first schedule to Custom Tariff Act. Its section note, chapter note, and the general explanatory note shall be applied to the interpretation of heading 9988. 9988 is pertaining to the job work, we can say the manufacturing activity on the goods supplied by someone else. So why it is applicable only to this particular heading? Probably there is a provision to clear the processed goods from the place of the job worker. Maybe with regard to that, these rules of interpretation with regard to classification, because there the when goods goes to the job worker will be in one form, and after that it may take some other form, then classification issue would come. So probably considering that aspect, only for that entry the rules of interpretation is applicable. Otherwise, for classification of the services, rules of interpretation provided in the Custom Tariff Act is not applicable, and section note, chapter note, etc. also not applicable, because Customs Tariff Act does not have the classification for service. Here, chapter note, section, or heading, whatever is specified in this notification, there is no definition or a meaning attached to it, though it is said in the annexed scheme of classification. So since there is no such annexed or a scheme of classification is annexed to this notification, this meaning we may have to have the general meaning. Then let us understand the classification of composite and mixed supply. In case of service, this is the most challenging thing to understand whether particular supply is a composite supply or a mixed supply, or it is a in undivided single supply. Because any particular supply may involve many elements. It could be supply of goods, multiple goods, or multiple supplies, or supply of multiple supplies of goods as well as services, or even multiple supplies of services. In such cases, whether it should be treated as a single supply, or it should be treated as a different supplies itself, or which one is the most important, or which one is the principal supply in that, because this is important to understand for the purpose of classification and application of the rate, and also again to identify whether it is amounting to export, FTP benefits, etc., etc. So in such cases, normally every supply will have many elements. For example, if you order for particular supply particular goods, when goods comes, it involves so many elements. It involves packing, it involves transportation, it involves maybe insurance, and so many things will be included therein. Then whether to charge separately for all these elements or it should be treated as a single supply, how this is to be determined, it's very important with regard to this composite supplies. So composite supply or mixed supply is important in classification of both goods as well as services. So let us understand what is meant by composite supply. If you understand the meaning of composite supply clearly, then it becomes easier for you to understand the meaning of mixed supply. This concept of composite supply exactly was not there in service tax. In case of service tax, it was called as bundled services. If it is, hello, Arjun, am I audible?
Yes, sir, you are audible.
Okay, because power went here, I thought of just checking. Okay, so in case of services, the bundled service, if it was naturally bundled, then the rate applicable to principal supply was applicable. If it was not, then highest rate was applicable in case of service tax. But under central excise, this aspect was not there. Though particular item may be having many parts or components, since that item is known as such in the market, there was no problem with regard to classification. But services, yes, there was many challenges, and in GST it is all the more difficult because it involves supply of goods as well as supply of services and also the combination thereof. So the education guide had given some good guide with regard to how to identify whether it is a composite supply or not. It was pertaining to the services. And if you look at the education guide, it appears this principle mentioned therein is taken out from the foreign act. Before going to that, let us understand the various elements, how the composite supply has been defined in the GST Act. It says the supply made by a taxable person to a recipient. So supplier has to be a taxable person to a recipient, consisting two or more taxable supplies of goods or services or both or any combination thereof. So there has to be two or more taxable supplies. Then these supplies, two or more taxable supplies, have to be naturally bundled. This is very important. And the supplies are made in conjunction with each other in the ordinary course of business, one of which is a principal supply. So these are the various components or factors which must exist to become a composite supply. And with regard to mixed supply, two or more individual supplies, it need not be taxable supplies. If you compare to composite supply, whereas in composite supply it has to be two or more taxable supplies, whereas in case of mixed supply it says two or more individual supplies made in conjunction with each other. It need not be in the ordinary course of business. In case of composite supply, it should be supplied in conjunction with each other in the ordinary course of business. Then for a single price, where such supply does not constitute a composite supply. So whether it should be single price or separate price is mentioned is not important with regard to composite supply, but in case of mixed supply, it has to be for a single price. Multiple supplies are made for a single price, and it should not be a composite supply. So in the case of understanding whether it's a composite supply or mixed supply, first we need to see whether it is a composite supply. If it is a composite supply, we need not go to mixed supply. Only if it is not composite supply, then only question of mixed supply will arise. To understand what is mean by composite supply, the card production plan case, this is the European VAT case. This has given a very good principle how to decide this particular supply, whether it's a composite supply or mixed supply. In this case, the petitioner was in the business of providing insurance to the car, and also in addition to that, he was providing some other services with regard to card management. Then the insurance was exempted from the VAT there. So the question was whether other elements like card management services or any other services provided with regard to in relation to that particular service, whether those are also exempted or only this particular thing is exempted. This was the question. So here the European court has come out with various principles to decide how the composite supply need to be understood, which are very important, and same law or same ratio or principle can be applied in case of GST composite supply also. So what are those principles? We'll see. Where the transaction comprises a bundle of features and acts, regard must be first to be had to all the circumstances in which the transaction takes place. So surrounding circumstances, facts of each case need to be considered first. A supply which comprises a single service from an economic point of view should not be artificially split. So where it is in the as per the perception of the recipient, where it amounts to a single service, then it should not be artificially split. The essential features of the transaction must be ascertained in order to determine whether supplier is supplying several distinct principal services or single services. So what is the essential feature, dominant intention of the transaction need to be understood. Then a service must be regarded as ancillary to a principal service if it does not constitute for customers an aim in itself, but a means of better enjoying the principal service supplied. For example, in case of supply of goods, the transportation and insurance is not the aim in itself. It only means of better enjoying the principal services of services supplied. That means for the purpose of getting the supply of goods, the transportation and insurance is only a means, which are only ancillary. In this case, the principal supply is the objective of that particular transaction, or aim of that particular transaction is to get the goods or purchase the goods, not the transportation, avail the transportation service or insurance service. So this is very, very important to understand what is the aim in that particular transaction, what is the means. So this helps to understand what is the principal supply and what are the ancillary or the incidental supplies. So when the principal supply is determined, then classification and all other compliance aspect will go as per the as it is applicable to the principal supply. So in every supply we need to see these aspects. And further it is said in that case, the elements of composite supply are all equally indispensable for carrying out the supply as a whole. So it is naturally bundled, and all the supply should be considered as forming a single supply with its own autonomous nature from the economic point of view of the typical customer. As far as customer is concerned, it's a single supply. He wants the goods, in this example, he wants the goods to be supplied to him. Whether in that case packing is required or transportation is required, insurance is required, all those things become subsidiary. But for him, the economic value is getting that goods for his business. So these are the various broad principles specified in this European VAT case. This gives the idea these principles need to be applied to the transaction to understand whether it is amounting to a composite supply. Based on this ratio or principle, we can summarize or apply to GST perspective. What it says is the most important aspect in composite supply are naturally bundled and principal supply. We have to see whether it is naturally bundled and what is the principal supply. If we are able to identify these two aspects, most of the things are done with regard to classification as a composite supply. Further, composite supply gives the principal supply gives the essential character to the supply. So in case of supply of goods, though there are other services or other supplies like transportation or insurance or packing, whatever it is, the principal supply is goods, because that gives the essential character to the supply. Bundling of supplies into single composite supply must not alter the essential character of the principal supply. This is also very important. Just by adding packing, transportation and insurance to the supply of goods, it remains to be the supply of goods only. The character of the supply, the principal supply, will not get altered. A natural bundling is a composite supply and artificial bundling is mixed supply, where the bundling of various supplies are done artificially, then it amounts to mixed supply. For example, you can say toiletry kit. Toiletry kit may include so many items like shaving blade, brush, cream, then comb, toothpaste, toothbrush, etc., etc. These all are not naturally bundled; they are artificially bundled, so it becomes a mixed supply. In mixed supply, identification of principal supply is an improbable task. You cannot say in this case which one is the principal supply. Can you say shaving blade is principal supply or toothbrush is principal supply? You cannot identify which one is principal supply. All other supplies, all supplies are equally important, and all supplies are aim in itself. So in such cases, it cannot be a composite supply. In a mixed supply, supply of one good or services does not necessitate the supply of another goods or services. So these are the various factors which we need to consider in classifying whether it is a supply of it's a composite supply or it's a mixed supply. In case of composite supply, the rate classification has to go along with the classification of the principal supply, the rate, and all other compliances required to be, if exemption is applicable, all exemption applicable to that principal supply would be applicable. If it is not a composite supply, then it could be mixed supply. If it is a mixed supply, then the highest rate, whatever is applicable among all the constituent of supply, should be applied to the whole supply. On the entire value, the highest rate would be applied. So these are the very important aspect with regard to classification. So first you need to understand whether it is a supply of goods or supply of service, or whether it is a composite supply or mixed supply, and then accordingly you need to see the rate notification for the effective rate. The examples of a composite supply could be and mixed supply. Same item, when it becomes a composite supply, and same with some other thing when it becomes mixed supply. I try to give the comparison. Here, airline providing catering service is a composite supply because the dominant intention is to travel by air, and providing food therein is incidental to it. So principal supply is the airline service. Then airline providing accommodation in a hotel along with airline services. Both are equally important. You cannot say which one is the principal supply here. So it becomes a mixed supply. Then school providing restaurant and entertainment service. Same school providing daycare services after the school time. In such cases, both are equally important. You cannot say which one is the principal supply. Then cell phone operator giving facility of collection of payment from home is the composite supply, and mixed supply when he also sells the handset. Selling handset is also an important supply by itself, and providing telephone service, the cell phone service is also an important element. Both in this case, you cannot identify which one is more important or which one is the principal supply. Hence, it is not a composite supply, and it is not naturally bundled also. Thereby, it falls into the category of mixed supply. Next, in case of branded goods, it's very, very important to understand how classification of branded goods is to be made, because in case of goods, if it is branded and packed in the unit container, then it will attract higher rate. If it is not branded, then a lower rate is applicable. So in this particular case, Australian Food India Private Limited, Supreme Court has set the various conditions in which this branding is to be seen. How you can say goods are branded? Because in this particular case, there was a single outlet which used to sell Cookieman cookies. The brand was not embossed on the brand Cookieman was not embossed on the cookies. Only it is a single outlet. No other products were sold other than the cookies of this particular company, and it was sold in loose also. So the question is whether it is amounting to sale of branded goods. In this case, the court held its physical manifestation on the goods is not compulsory requirement. Such goods can be said to be branded as long as its environment conveys so. That is packing, wrapping, accessories, uniform of vendors, invoices, menu cards, hoardings, display boards of outlet, furnitures, etc., etc. These are the various aspects which collectively makes it is a branded goods. Now the question comes, suppose wheat flour is sold by DMart, whether we can say it is the branded goods of DMart. Now, what is meant by brand? This is also very important to understand. Whether by just putting the name of DMart, whether that goods becomes a branded goods. See, in case of Astra Pharmaceuticals, the Supreme Court again defined what is brand and what is housemark. Housemark is usually a device in the form of an emblem, word or both, as an identification of the manufacturer, whereas brand name is invariably a word or combination of a word and letter or numeral is the one by which the product is identified and asked for. In this example what I gave, DMart, it is connecting with the marketing marketing chain, name of the company. It does not connect with the goods. So brand name has necessarily to be having nexus with the goods which is being sold, not with the not with the manufacturer or the person who is marketing it. So there is a difference between housemark and brand name, and it should be clearly should be understood whether it is the moment any housemark or any emblem or any name is attached to the packing of the goods or on the goods, if it is embossed, whether it becomes a branded goods or it is only a housemark and it is not going to be branded goods. So this clear understanding of housemark and brand name is very important. Accordingly, it should be seen whether particular goods is a branded one or not. Accordingly, you have to see the rate notification for the effective rate. So next one is software. Software has been a very challenging classification right from the earlier tax regime. Earlier, in case of central excise tax, the excise duty was applicable on manufacture of any goods. So software is an intellectual property. It is a fact that when any intellectual property is written on a media, it amounts to manufacture and it becomes goods. So for example, if software is written on or copied on a device, say CD, cassette, or any hardware, then it becomes a goods. And also intellectual property, for example, art. When it is there in the mind of the artist, there is no existence to it. But the same thing when you put it into the canvas, it becomes a goods. So it is intangible asset. So this challenge was there, whether it is amounting to manufacture, whether it is a goods or whether it is a service. So in case of central excise, the software developed as per the requirement or tailor-made software was exempted from excise duty. Only canned and packaged software is liable for excise duty. So canned or packaged software means the software which can be used by multiple users, which are not meant for any specific customer. It's a general product which can be used by any person. So then question of VAT, whether VAT was applicable on the software. As you are aware, VAT is applicable on sale of goods. So the software, whether it is goods or service, again there also, if it is a sale of goods, VAT is applicable. If it is only transfer of right to use the goods, then again it is having the element of service, as well as VAT is also applicable because it is said to be deemed supply sale of goods. So this challenge, it was there in the earlier tax regime. Now the question is whether same challenge is there in the service, sorry, in GST. In GST also same issue is there, though it is specified in the schedule 2 that development, design, programming, customization, adaptation, upgradation, etc., in the implementation of the information technology software, it should be classified as a service. So question is, as I mentioned, when it is written on a media, it amounts to goods, though it is given or supplied in a media, but it is the tailor-made software, then it should be necessarily classified as a service as per the schedule 2 of CGST Act. Then supply of goods 8523, it says information technology written on any media is goods and attracting 18%. Now again question comes, as you know, the GST is applicable on supply. Supply may be supply involves so many things like sale and as well as transfer. So here whether it is sale of software or transfer of right to use in the software, this is the again biggest challenge. The apparently it could be in the nature of goods being written on a media, but software is being sold. We need to understand, see, rate may be same whether it is sale of software or transfer of right to use. The 18% GST is applicable, but in terms of certain benefits like refund in case of inverted duty structure, etc., it makes a lot of difference whether it is supply of goods or supply of service. See, how to identify whether it is supply of goods or supply of services in case of software written on a media. See, in case of sale, the title is transferred to the buyer. The buyer is free to do whatever he wants to do. He can further sell it, or he can use in his own business, or as far as whims and fancies he can utilize. But normally softwares are not sold. It is only license is given to use. Again, whether it is merely a license to use, if it is merely a license to use, it is in the nature of service. Then also the question arises whether it is merely a license to use or transfer of right to use. There is a difference between license to use as well as transfer of right to use. Transfer of right to use is again a deemed sale as per Article 366(29)(a). Of course, now that issue is not there, but the thing is how to understand whether it is in the nature of transfer of right to use. That be the case, it falls into different classification. Rate is same, but classification would be different. So in case of Rashtriya Ispat, the Supreme Court has laid down certain principle to understand whether it is amounting to transfer of right to use. As per that case, the important aspect is whether there must be a goods, and there has to be consensus added with respect to identity of the goods, and the transferee must be able to enjoy the all benefits attached to that particular goods, where all permissions, sanctions, etc. And the transferor should not continue with the benefit of that particular goods which he has transferred. And also the transferor should not be able to transfer the same right to someone else. If all these 5 elements are present, then only it becomes the transfer of right to use. How to identify these aspects in case of software? It is very difficult. That particular challenge is still continuing in GST. There is no relief for these challenges which were there under earlier tax regime, even in GST also. Further, another challenge is if the document of title is given on a paper, and then it should be classified under chapter 4907, which is attracting 12%. Suppose a software is sold, and so the license is given by way of paper. They popularly called as paper license. In that case, the classification would be under different heading at concession rate. So these are the various challenges which are there with regard to classification of software. Then car service. Again, this is one more interesting case. As we are all knowing, when we take the car to any service or any garage, authorized service center, etc., there may be element of only labor, or in some cases maybe labor plus parts and consumables. Labor may be less or more, parts may be less or more value in terms of value. In some cases only you may go and buy some parts or consumables. In such cases, how to treat this, whether it's a composite supply, whether it's a mixed supply, and how it is. See, interestingly, circular number 47 of 2018 has clarified that where in case of authorized service centers, where the supply of goods and value for supply of goods and supply of service are separately shown in the invoice, then rate applicable to such supply should be applied. That means if you look at the exact nature of the supply, here it may involve multiple supplies, so mainly supply of labor and supply of parts and consumables or any accessories. In such cases, it has to be a composite supply, because the intention of the car owner to go to any service center is to repair it. It is not, he is not going there to buy the parts or component. He normally goes in case of any damage to the car or any problem with the car, he goes to get it repaired. The dominant intention is to get it repaired, not to buy the parts. When in case of when it is the dominant intention, it should be the principal supply. So it has to be a supply of service, that is repair. That be the case. In many cases, what it may happen is the component of or value of labor may be less compared to value of the parts. So parts are generally costly depending upon the car model and manufacturer. Suppose the Mercedes-Benz car engine is to be replaced, then it will be in the value will be in lakhs, whereas labor charges for the same might not be that much, maybe 10% or 20% of that. In such cases, if you treat this is supply of service, it may attract 18%, whereas the parts may attract 28%. So there's a huge revenue loss to the government, and also that is the reason government has clarified by way of circular, saying that if the separate value is available, it can be charged accordingly. But the question remains whether composite supply can be vivisected as per the convenience of the taxpayer or the recipient. This circular, it appears it is against the principle of composite supply. Validity of this circular is always challengeable. If it is not in line with the provisions of law, then it is not even binding on the department also. Anyway, assessees are not bound by the circular. But the problem is all these automobile dealers or service providers, they don't want to take any risk, or they don't want to get harassed by the department later on. So they want to go for the safe method by classifying these two into different services, neither composite supply nor mixed supply. They will treat this as a different individual service, though they are very integrally associated. You cannot have one without another also, and the dominant intention is to go for repair. In spite of that, they are continuing to charge the separate for labor and separate for parts and consumables and accessories. And the government is also keeping quiet, and it is not clarifying, because in the event if it is held to be a composite supply, then the rate of tax or the revenue could have been less to the government. Ultimately, because of this, now consumers are suffering. Next, supply of solar power plant. Again, here it's a departure of the basic principle. Whether it is immovable or movable is a question. Of course, it is. It involves a lot of civil work and the plant is a combination of various devices, equipments, and machinery. So certain portion it can be dismantled and taken to elsewhere without substantial damage to it. But it also involves various civil structures. Thereby, it becomes a movable property. And once it is supply of labor and material resulting into immovable or in connection with immovable property, it becomes a works contract. So once it is works contract, then we need to see again the rate applicable to works contract should have been applied. But notification by notification number 24 by 2018, read with the 27 of 2018, they have come out with one novel idea wherein they have simply bifurcated the value. Material value 70 is considered to be 70% of the total contract value, and the rate attracted is 5% on that, and the labor portion is 30%, and the rate attracted there is the 18%. So these two are, to my knowledge, are the deviation from the basic principles of a composite supply, mixed supply, and works contract, whereby government has in this case government has done it by notification. In the earlier case it is only circular, clarification by circular, but both are not in line with the provisions of law according to me. Then question of classification of a printed material. Again, here also a lot of issue was there, whether it is amounting to supply of goods or supply of services. See, here it is said by notification circular saying printing of books, pamphlets, brochures, annual reports, and the like. It becomes supply of service if the content is given by the recipient and physical input is supplied by the printer, and it is classifiable under chapter 9989. Whereas in case of printed envelopes, letter cards, printed boxes, tissues, napkins, and wallpaper, etc., if the content is given by the recipient and the physical input is supplied by the printer, it should be classifiable under chapter 48 or 49. If you look at the activity done is the same in both the cases, but only the substance is different. Based on the substance, the same activity, either it becomes service, or same activity it becomes supply of goods. So we need to see the substance in this particular case. Next is supply of food and beverages. Schedule 2 specifies the food and drinks which are supplied by way or as part of service. Then it becomes, or and for a consideration in cash, deferred payment, or any other valuable consideration, then it becomes supply of service. This is the classification based on schedule 2. And also rate notification specifies what is restaurant service. So to become the supply of food and drinks as a service, it should be served as a part of service or as a service, and that has to be for a valuable consideration. These three things are very important things. And in case of restaurant service, it means supply by way of or as part of service. Then goods being food or any other article for human consumption or any drink provided by a restaurant, eating joint, or including mess, canteen, whether for consumption or on away from the premises, whether such food or any other article for human consumption or drink is supplied. Then again it has defined what is meant by outdoor catering. Here the supply should be at exhibition halls, events, conferences, marriage halls, and other outdoor or indoor functions that are event based and occasional in nature. So what is important here is the supply is same, the activity is same, but the place is different. Then based on that the classification difference. If it is at a restaurant, supply of food by way of service. If it is at a restaurant, eating joint, etc., etc., then it is restaurant service. If it is provided at exhibition hall, event, conferences, etc., etc., it becomes the catering, outdoor catering services. Earlier we said depending upon the goods, in case of printed material, the activity was similar but the substance was different. Here the substance is same, that is food and drinks, but the place where it is being served are different. And another aspect here is to become service, the supply of food and drinks to become service, there has to be, it should be supplied as a part of service or by way of service for a consideration. For example, if canteen service is covered under the definition of restaurant service. In this case, if it is provided without value, without any consideration, if it is supplied free of cost, whether it is a service or still remain to be a supply of goods, this question may come. Since the restaurant service is specifically defined and wherein consideration is not mentioned, then in my opinion, though there is no consideration, still it is covered as a restaurant service. Next, residuary entry. In GST, one more important aspect is there is one entry called entry number 453 of Schedule 3, where it says goods falling under any other chapter but not specified in Schedule 1 to 4, 5, 6. That will be covered here in this particular entry, and the rate of tax applicable is 18%. So here there's a very great challenge in classification, especially though with regard to those goods whose exact description is not mentioned in the rate notifications, but they are also attracting a lesser rate, maybe 12% or 5% based on the rate notification. In such cases, a department may try to put that particular entry or item in this particular entry in the absence of any specific description in the rate notification, so that 18% may be attracted. For example, in case of chapter 3822, classification of diagnostic kits and reagents, the GST notification only contains the heading, as I mentioned earlier. So heading given there is all diagnostic kits and reagents, whereas in case of if you look at the same description in the Customs Tariff Act, it includes so many other items. Minutely, the tariff item also has been described, which includes both laboratory reagents as well as analytical reagents. So here, in one of the cases, practically the department is trying to say the rate notification which is having the entry for all diagnostic kits and reagents, which attracts 12%. It covers only diagnostic kits and diagnostic reagents. Analytical reagents it is not covering in that particular entry, so it has to be classified under entry 453. This is what the contention of the department. It appears to be very unreasonable. See, earlier, prior to this recent provisions of Central Excise Tariff Act, in the same Tariff Act, there was one entry, tariff item 68. I think somewhere in 1975 it was. So there, the items which are not classifiable under any of the specified entries there in the tariff, it was to be classified in that tariff item 68. So there are many Supreme Court decisions wherein it has been said this is a very bad part of the law. There cannot be any entry which cannot describe the identity of the goods. You cannot tax the goods which does not been properly having any description or its identity. So accordingly, subsequently that particular entry was removed. But again in GST, this entry has been provided, and this is going to create a lot of challenges, because the description of the item is not that detailed as it is there in the Customs Tariff Act. In the rate notifications, mainly the description of the heading, that is 4-digit, only are mentioned. So whether that 4-digit covers all the items which are classifiable under that particular chapter heading as per the Customs Tariff Act or not, it could be challenged or disputed by the department. So with regard to this particular residual entry, Supreme Court in case of Mayuri East India Private Limited held that in interpreting different entries, attempts shall be made to find out as to whether the same answers the description of the contents of the basic entry, and only the event is not possible to do so, recourse to the residual entry should have been done by way of last resort. Again, in Mumbai High Court, in case of Garware nylons, it is in more in detail it held. When sufficient prescriptive or descriptive details of the goods are not available and the goods can be classified into two entries, it is a tendency to go for a more beneficial one. Therefore, the fiscal law should always be specific, leaving no matter of doubt in the minds of the taxpayer. The general entries like entry number 68 may have expedient legislative purpose, but it is not appreciative, since it does not give the definite description of the goods or disclose the identity of the goods, and everything is left to the adjudication by the authorities. So this way, it is very, we can say this entry is going to create a lot of dispute, and most of the entries which does not match with the proper description given in the rate notification, department may try to classify under this particular entry. So we have to be really careful while making the classification which does not have the proper description matching with the description given in the rate notification. Then there is another principle called trade parlance in case of classification. Trade parlance means how that particular product is known in the market, because in the case of especially pharmaceutical products, there may be some technical description given to the product. It may have some value to classify that as a medicine. The challenge is to say we can say whether it is medicine or a cosmetics. In case of medicine, the basic essential element is the its therapeutic and prophylactic value. Therapeutic means the ability to cure particular disease, illness, and prevent the disease, and prophylactic value means to prevent any particular illness or disease. So this unless a particular substance or particular item is having curative or preventive value, this cannot be classified as medicine. Similarly, it doesn't mean that if, all the items which are having some element of curative or preventive value will be classified as medicine, though it is basic conditions, but that alone cannot determine whether it is medicine or cosmetic product. So then the trade parlance has to be seen. The trade parlance means how it is known in the market, whether in the market it is known as medicine or whether it is known as a cosmetic product. Accordingly, this classification has to be made. The Honorable Supreme Court in case of Shri Baidyanath Ayurved Bhavan Limited, it is said, scientific and technical meaning of the terms and expressions used in the tax laws like Excise Act not to be resorted. The goods should be classified according to the popular meaning attached to them by those using the product. For example, Dant Manjan Lal, it may be having some preventive value. It may prevent the decaying of the teeth, and it may make more shining, and some even curative value also it may be having, but it doesn't mean that it becomes a medicine. It is in the market, it is known as a tooth powder. Once it is known as a tooth powder in the market and regularly being used by the consumer as a tooth powder, it should be classified as a tooth powder only. Similarly, now the latest hot product is hand sanitizer. There are many classification applicable to hand sanitizers. If it is depending upon the way in which it is manufactured, or from which substance it is being manufactured, or what is the purpose of its manufacture, all those things makes a lot of difference. It can be classified as a cleaning preparation or a skin washing liquid, hand cleanser, or disinfectant. See, if it is classified under hand cleansers under chapter 3003, rate attracted for presently is 12%. So many manufacturers are trying to classify this hand sanitizer as medicines. Of course, it is preventing the spread of COVID-19, as it has been said by many health authorities. But whether it's a medicine, it is only an substitute for washing the hands as per the prescription of the WHO, that is 20 seconds washing with turning your hand in different ways and applying proper soap and all. To substitute that, this hand sanitizer with specified amount of alcohol is specified. but since it has got preventive or it is preventing the spread of the virus, just because that whether it can be classified as a medicine, in my view it cannot be, because the trade parlance says moment it is hand sanitizer, it becomes we know it is to just clean the hands. The perception of the consumer is to use this as a hand cleaner only. But in some cases, if the manufacturing is done as per the license obtained under Drugs and Cosmetics Act and as per the quality provided in any pharmacopoeia, then it may be treated as medicine also, when it is specifically based on its technical ingredients involved in it and subject to other criteria to classify as medicine. If in certain cases this can be classified as medicines. So we need to see various aspects, its constituents, its procedure, the legal permissions or regulations applicable for manufacturing, marketing, storage, etc. Then how it is known in the market, how it is to be used, what are its basic characteristics. All those things need to be seen before classifying the goods. Then the last one is the classification of the parts and accessories. See, in case of rail assembly, that front seat adjuster and slider. See, in case of any car, the front seat can be moved front and back. Sometimes it is you can taken up also and down. So these adjustments are provided through rail assembly. Whether it is classifiable as a part of seat under chapter 9401, or it should be classified as parts and accessories of motor vehicles. This was the under chapter 8708. This was the challenge. So a Supreme Court had, in case of Insulation Electrical Private Limited, that it should be classifiable as parts of automobile motor vehicle only, because it is integral to the seats are complete without such rail assembly. So it is not, it's a very general classification, whereas it is more specific as part and accessories of motor vehicle. So it should be classifiable under chapter 8708. And also it defined what is known as a part. A part is an essential component of the whole, without which the whole cannot function, whereas accessory it is complementary or subordinate in nature and need not be essential for functioning or actual functioning of the product. So by this way we need to see whether it is part. Normally parts are all declassified along with the whole, and whereas accessories, depending upon the circumstances, this need to be classified. So it is important to understand whether it is parts or accessory, and in some cases it is really difficult whether it is general part or specific part. For example, clamp. It is article of steel, and it is required to connect the pipes, say hose pipe. It is used in automobile industry. It is used in maybe railways. It is used in agricultural implements. It is used generally by any mechanical applications. So if it is for railway, it is either exempted or as the less rate, or if it is automobile parts, it may be at higher rate. If it is parts of agricultural implements, then it is again exempted. So if it is general, again we have to see where it should be classified. Based on end use, sometimes classification varies, but if there is a single manufacturer, if he is supplying to all, then how this classification is to be done is a bigger challenge. Normally in case of automobile industry, he has to manufacture the parts based on the specification given in the manual of automobile industry, and also the conditions and also the standards to be maintained in manufacturing and in terms of quality, etc., are specified therein. So when it is manufactured according to that, then it should be properly classified as parts of automobile industry only or motor vehicle only, and the additional use in this general industry or any other purpose, that will not change the classification. So with this, I am completing my presentation and request my co-panelist Madhukar sir to add values in whatever presentation I have made. Thank you very much. Madhukar sir.
Good afternoon, participants. I think we have completed the whole time available. So I hope that we can take a few more minutes to add up a few aspects which can support what Vasanth's detailed presentation. Much of the confusion in GST, wherever you have found, is something which you have heard throughout. But the fact is that about 90% of the time, your classification, even based on your Google, will give you the correct one. However, wherever there is a doubt, then you need to apply many of the principles which Vasanth has spoken about. In some cases, the concept of a composite supply or a non-composite supply is very important, or a mixed supply. Mixed supply comes only if there is a single rate, something like a package, like he mentioned, toilet kit or gift pack, something where only a single price is there, then only mixed supply comes into being. Whereas if you are buying all those things separately and a single bill is made, that doesn't make it a mixed supply. Then it will be individual parts. One aspect which I thought which is important is that important for us, wherever there is a doubt, the procedure would always need you to look at the section notes, and the whole tariff is broken into different sections, and within each section are various chapters and these chapter notes also. Normally, the chapter notes and the section notes are paramount importance. When you look at the entry, then you should see the chapter notes and the section notes to see that there is no incongruity or what classification you are doing is not against it. Chapter notes normally will say what is not included in that chapter and what is included in that chapter specifically. So if your product is there in the not to be included in that chapter, then you cannot classify in that chapter, even if the description seems to be correct. This is very important to look at. And as I said, the important aspect will only become for about 10%. So say the chapter notes, section notes, everything you have done, still you have this issue like the one which was raised before you just now on sanitizers. So there are a lot of arguments which can be there for that sanitizer, and I'm not going to repeat what Vasanth said. But if I were to go for classifying sanitizer, I would take it for something which is preventing disease. And if I can establish that there is enough doubt between those 4 conflicting entries which he had put, I will take the one which is most beneficial for me. This is also backed up by several Supreme Court decisions which say when the rate is not determinable clearly, then the one which is beneficial to the SSC can be taken. And I will use that to classify it at 12% if at all I have a possibility of advising somebody. The next point which I thought I will bring to your attention is that we here specifically talk to you about brands, and these brands are applicable for various chapter heads like meat products, fish products, dairy products, cereals, and milled items like your Ashirwad Atta or whatever. So in all these chapters, the brand name becomes important, and what is brand name and what is not a brand name will decide whether it should be at 5% or it will be at 12%, or it could be even at nil rate of duty. One more aspect which I thought I should bring to your attention is that many times the classification of a product depends on various aspects. Number one, what is the explanation given by the person who deals in it, the manufacturer, trader, or service provider? What does he call it, and what does he understand it is? Number one. Number two, what is it that the contract, agreement, or purchase order, work order describes it as? Third, how is it being billed? Fourth, what is there in the advertisement material, website, or in brochures or in pamphlets? What is it described as? So all these four or five aspects may put a doubt on the classification. Ideally, all should be the same and it should be the reality. Nomenclating something as something with something else is going to be a fraud, and you will end up with demands for the differential taxes. One aspect which also wasn't touched on was the trade parlance. This is a very old concept. I think very long back. I think in the 1700s, Lord Denning was there. He was a famed judge in the House of Lords. He, as well as Lord Mansfield in 1750s, they said that the law should follow the trade. Unfortunately, when the department comes, the trade has to follow the department's view and not even the law. There is something which you can keep in mind so that when there is an issue, you can look at that. One more aspect which I thought is important is that whenever you have any doubt, one of the best practices you could do is make a clean breast of what is for and against each classification, and tell the department why you think the classification which you have chosen is the better classification. Classification can also impact your export benefits. Whether it's a service or goods, the classification of the service or goods can determine whether you will get the export benefit and at what rate. That's also something which I thought I will add. The reason why I'll end up with why there are so many rates, though it started off that GST will start with a single rate for goods and services. Then they said, no, there will be a merit and demerit rate. Finally, we found a lot of rates being there. This is because of the diversity of India, and all of us are aware that 80% plus of the wealth of India is held by 10% of the people, and the extent of people below the poverty line, maybe if you take it today, maybe even 50% and below, which is a real fact. Unemployment in this pandemic period has become tremendous. And therefore, government needs to ensure that essentials are always at lower rates. And there is also one more reason why rates, big rates, high rates have been put for goods which are sin goods. But these are all not good practices for a VAT law or a GST law. Rates have to be reasonable. For example, the rates for gutka is 280%. Pan masala is 80%. Now, do you think any of these people, however big or small they are going to pay this sort of a cost? Say a gutka packet is there, which is being sold, which is being purchased by you and me at say 10 rupees. The tax which is involved in that possibly would be approximately 4 rupees. And the margin of the person possibly will be 20 paisa or 30 paisa to the manufacturer. Do you think people will not evade when such a high tax is there? Obviously, they will evade. So these high rates, also these different rates, has caused a lot of problem in India. And I think with that, I will stop and take the question and answer. Except one more thought process is that please do not follow advanced rulings blindly. 90% of the advanced rulings which are given are not given as following judicial principles, because advanced rulings are passed by departmental officers, and therefore you have to be very careful either to go for advanced ruling or follow advanced ruling. You will need to again go back and find out whether what is the correct classification. With that, I will hand over back, and in the question answer session, if I have to add something, I would certainly add. Please be safe and please be happy with what you are. We are grateful for the good things in life.
Thank you, Madhukar sir.
Thank you,
for
Madhukar
your
sir, adding valuable inputs. Arjun?
Yes, sir. I will thank Vasanth sir for your elaborate session. Madhukar sir for your value additions. Because of this elaborate session, I think so the queries are very less today. Only 2 queries are there. So move header to the first query. Sir, in S12 regime, the rate of tax was provided through a separate enactment like Customs Tariff Act. However, in GST, it has been delegated to notification. Is there any impact due to such delegation? What is your opinion on that?
As it is held in Mohit Miralal case, Gujarat High Court said it has not been delegated, or the rate notifications are beyond the delegated power. And also the argument put forward therein was this this is the fundamental or basic duty of the parliament to describe the goods or services which are to be taxed, and also the specify the rate. This cannot be delegated, or it is not delegated presently in terms of GST also. So under such scenario, the impact is the Supreme Court, which is going to, the order of the Supreme Court is going to be the law of the land, and the court can say it is incorrect, and also find out or specify the remedy how it can be corrected, because it is really difficult. If it is said it is ultra virus, there is or whatever rate is prescribed is not correct, then the 4 pillars of the taxation, which are basic pillars of the taxation, would out of that one would not be there, then that tax itself will not survive. So under these circumstances, how government is going to do, or even court is going to hold its view, is yet to be seen. As far as Gujarat High Court is concerned, categorically it said the rate notification number 8 under IGST is ultra virus because it lacks legislative competence.
Okay, sir. At the second, Madhukar sir, anything to add upon?
There, I think I agree with Vasant that this entire rate notification is invalid in law. However, remember that we are all living in an imperfect world, and if you look at the Supreme Court will also say that it is invalid. But I suspect that they will make a retrospective amendment wherein they will rectify this defect and get it passed through Parliament also. And this retrospective, once they make the retrospective amendment, that retrospective amendment cannot be challenged in the Supreme Court. Otherwise, the entire GST collection itself will become invalid. And therefore, that will not be in public interest. And I am thinking that initially, the Supreme Court or other high courts also will hold that these rate notifications are invalid. However, after the government goes forward and makes a retrospective amendment and gets it passed properly by the Parliament, then it would be valid, and therefore challenging it will not make much difference, what I think. You may also like to see one YouTube video which is there. Shri Nambiar, Jayachandran Nambiar. If you can go to YouTube and watch it, it talks about how delegated legislations can work. You can take the next question, Arjun.
Yes, sir. Sir, the last query for today's session, it is in the query is in relation to Mohit Mineral judgment. Sir, you said that serial number 8 of IGST notification lacks legislative competence. Can you explain the base why it is lacking the legislative competence? Is it due to jurisdictional issues?
As it has been mentioned in my deliberation as well as in my earlier answer, the, as per the earlier Supreme Court decisions, it is the duty of the Parliament to prescribe the rate. There cannot be this function cannot be delegated, or even in case of GST, it has not been delegated also. In the absence of specific authority to issue the rate notification, the rate notification issued by the government is invalid. This is what the Gujarat High Court has held in case of Mohit Mineral.
Okay. Based on this rationale, they have specified that serial number 8 is lacks legal competence.
Notification number 8 as well as entry number 10 of notification number 10, which specifies the on ocean freight are under RCM, the importer is liable to be paid. RCM is liable to be paid by the recipient, whereas in this case the liability was fastened on third person, that is importer, who is not the recipient. So that particular entry has also been struck by Gujarat High Court. Yeah.
Okay. Okay, sir. Sir, anything to add up on Madhukar, sir?
No, it's okay.
By this, we have addressed the queries raised by the participants during the session. Thank you for your elaborated and detailed session, and thanks for Madhukar sir to add upon value addition to the session deliberated by Vasanth sir. Thank you, sir.
Thank you very much. Thanks to all the participants. Sorry, we delayed your food for some time, and we hope we are given some food for thought as you are hungry of knowledge. And thank you, Arjun and Karan and everybody for organizing this. Divya also. And thanks to Madhukar sir for adding the value. Thank you very much.
Thank you, sir. So we will wind up today's session, and we can meet up tomorrow on the topics of unresolved issues on the exemptions taken by CA.VENKATAPRASAD and unresolved issues in respect of valuation taken up by CA.GAGAN. Thank you for today. Have a happy learning.